Okay. Let me know when we're going live. We're live right now? Okay. Hey, everybody. This is True Demon, the Devil Stockbroker, here to bring you an update on some of the latest runners that are going on this morning, February 9th. So, our current pick that we've got that's basically stolen our attention is BKKT. Go ahead and roll on into this. BKKT set up this rising wedge. If you notice BKKT on its longer time frame, get this into a bigger chart. BKKT has been in a sell-off channel. It had a previous squeeze that occurred during, I believe it was Bitcoin making its run to $60,000 or something like that. It was a ridiculous price for Bitcoin. And BKKT announced their crypto mining operations were in full swing. It brought in a surge of volume and squeezed the stock big time. Now, BKKT is showing some strength after having a long, long period of selling. This bull channel, as we would call it, or a downtrending channel, which tend to break upward, finally had its breakout occur back on the 1st of February, 31st January, thereabouts, and started to show some serious strength. Now, adding on to that, the Ortex data is exciting as hell. Come on, Ortex, don't slow me down. So Ortex tells us, start that over. So Ortex tells us that the short interest has been climbing rapidly ever since the price surpassed, I believe it was $7.50, and has been in a steady rise ever since then. Basically doubled its short interest uh, ever since then. We're currently at 25% of the stock shorted, with 11.42 million, putting roughly 45 million shares uh, on their float. Average days on loan shows that most of the shorts, or at least an average number of the shorts, have been in this play for less than 30 days, meaning that a majority of them, their best price is around $8 to $7. Um, and currently, with the utilization maxed out at 100%, they're basically out of ammunition to short the stock. Failures to deliver spiked multiple times, with this most severe one happening on the 21st of December. And there was a period of sell off right before then, and then like a brief spike, and then the sell off just continued from there. Nice and slow roll on down. The bounce happened at around $3.50. So right now, we picked up this play right after BKKT passed this, broke out of this falling channel, and we've been in consolidation when all of a sudden, just in usual fashion, the pop came out of nowhere because Bitcoin jumped in price all of a sudden by about 20%, um, 20, 15%, something in that area. I actually have to compare it here on the charts. Only a 9% gain, actually. Um, but regardless, with Bitcoin's price moving, that obviously had an effect on BKKT. So right now we're screaming past $6.50. Let's go ahead and take Bitcoin off of here so that we can look at the actual price. So with BKKT, the current setup is looking like a rising wedge, which is uh, this is our signal for when we want to get out. Currently, we've got some resistance ahead of us at 780. This is my personal target that I'm looking at for my exit. This is the setup is looking really strong, but there is a possibility that after we hit some consolidation, that BKKT can continue to move. This is one where we're looking actually at a big gap fill here between $10 and $14. So I'll go ahead and review a couple of the other plays that we've also got cooking here. So in addition to BKKT, we're also watching BTBT, that's Bit Digital Inc., which is a very similar setup to BKKT. They've both got the same indicators on them. The OBV being one of the main ones that we're paying attention to, with a nice plateau forming on both of them. Let's look at that one on the daily, so we're all in the same time frame. As you can see, OBV kind of does a slow roll downward, but the price skyrocketed and fell straight through the floor. The OBV hasn't even reached the halfway point at the lowest point when BKKT fell through. So now that the OBV is rising, with this small amount of price and this much volume coming into the stock, we're looking at a possibility for a squeeze scenario just based off of FOMO buying. And with BTBT creating a similar setup, uh, big jump in the price, and then price downtrend, match that up with this OBV, shoots up and then consolidates. That's the same kind of move that we're looking for. So right now, we're thinking at about, we're going to say 750. That's 750 million shares on balance. $750 million. Add that alert. Crossing above. Go ahead and set up this alert for the Discord. That'll be our bullish signal for any additional entries that we want to make. Funware and DWAC. So Digital World Acquisition Corp. This is a SPAC play. This one squeezed pretty severely from $10 all the way to a high of 175, which, if you can believe it, is an even bigger squeeze than AMC saw. That's the power of FOMO right there. It was a ridiculous amount of both institutional and retail buying. And I believe it was pumped by former President Donald Trump. So it was this is one that's very volatile, very unpredictable, but it is starting to show a strong setup with a rising uh, channel. And if it plays out the way we think it will, maybe if we can start to challenge this resistance at about $95 or $90 or thereabouts, we may end up seeing another huge move in the stock. The strength is there, and the OBV is starting to curl up above its previous high point. So this is an opportunity for FOMO to kick in, especially if we get some additional volume coming into the stock. Funware, very similar. It is also it's also very much tied to DWAC. Kat Moores, my co-host and chief analyst, will probably be able to tell us a lot more about the DD here on Funware. Unfortunately, I'm not going to be able to stay here for the rest of the stream, so I'm going to leave you guys in the capable hands of my co-host Kat Moores and the rest of the analyst team. Kat, go ahead and take it away, and I will see you guys in the next in about an hour.
Sweet. Well, thanks for coming in, man. We'll see you in a little bit.
See you in a bit.
All right. Well, shaping up to be an interesting day already. Let's see what we got going on the tickers. Oh, man. Got SPY trying to push a little. Okay. And,
Yo, look at Amy go.
what'd you say, Bula? Oh,
Look at
what?
Amy go.
Oh, yeah. AMC's going. Billy Dark Pools MGM is printing. Oh, man. Ooh, AMC. Getting some volume, I see. Hello, darling. See here. Get a little organized here. I'm hesitant on still have these SPY calls. I should probably get rid of them. Let's see. Keeping up. DWAC falling a little bit. Like to see it hold. Maybe do a double bottom. Well, hopefully a higher low, but double bottom at worst case. I swear, WAC is just always ripping ever since I started watching it. Ooh, that's a really nice breakout on WAC too. I actually quite like that. I didn't even notice. Three higher lows, and then a breakout of a pretty major resistance here. Breakout of this downtrend too. Oh me, oh my. Got a lot of good opportunities. Sheeb, always sheebing it up. I'm really amped about PROG. I want to see how this goes, because that tap of 201 was right off of what it broke through after all that time. Ooh, SPY's looking pretty strong there. Go ahead and take one of these. Oh, and matter of fact, I gotta share my screen with Discord. My bad, guys. My bad. There you go. And take a DWACS
Boy,
chart.
boy, boy. Look at AMC go.
The beautiful thing about AMC is making this strong move right in the middle of the day as people go to lunch. So this is extremely bullish. We have 23 million traded volume already so far.
Boy, over 18. Woo. Oh, wow.
To the moon.
To the moon indeed. Wonder what the flow looks like on that right now. Because it was pretty heavy bearish last time I looked. I wonder if that's changed. Yeah, definitely not bad. The flow's definitely greener than it has been in previous days, so that's good. If this thing really starts to move, I'm sure we'll see some of that activity pick up though.
So we got a question in Discord. Anyone know the max paying for AMC for this week?
I'm not sure. Let's see.
BBI. BBIG trying to take a little bit too. The SPY is pumping, Jack.
Well, I'm seeing on maxpain.com for the 11th, Max Payne $17. Highest call open interest strike is 20. Highest put open interest is 17. Call open interest 137,000. Put open interest 91,000. Put call ratio of 0.665. Yeah, so Max Payne looks like $17 for the 11th. Turn the volume up a bit. Gotcha. Yeah, try and fix it.
We got a suggestion on YouTube says turn the volume up a bit if you can.
Gotcha. How is this sound any better? And if a couple other people want to speak, make sure Discord volume's good too. Okay, cool. So then
Well,
mine's
look at BBIG, brother.
BBIG.
BBIG just had a massive volume candle.
Ooh, look at it. That's beautiful. That is a beautiful thing.
GME wants 120.
Oh boy. GME.
Morning, everyone.
Morning, man. What's up?
It's my brother.
There's so many good tickers right now. I don't know what to keep up on the screen.
Got to be like Pokemon, baby. Got to catch them all.
That's what I was gonna say. This is where my aggressive tab clicking comes in handy. I didn't realize till that first stream that I did how often I'm switching between tabs. I'm sure I was giving people motion sickness. Ooh, Ford. Ford's getting some green too. Wow.
Yeah, I picked up a $19 Ford call for March the 4th, and it refunded me 40% today.
Nice. Ooh, PROG looking for round 2. Let's go. $1.96, trying to break that little resistance there.
BKKT is about to rip some faces off, G.
I wish I was in on AMC. That thing's up 10% today.
Oh, BKKT, that is really looking strong. Let's see if this could either be a little double top at 715 or if it breaks through that, which it looks like it will. That could be another leg up.
Bro, look at BBIG. That shit ain't stopping. What the heck?
Every time you go look, I keep switching between the charts. I'm like, I know it's serious. Trying to flip through.
What the? Look at that
Wow.
volume.
The push on all these small caps today makes me extraordinarily curious as to what's, because this is not, there's no way that all these plays that everyone's been in forever, that everyone's been waiting for, are all now doing this. Like, this is very weird.
Damn, BBIG is pumping. Wow. Look at that volume. What's going on with that?
Damn. Let me see if there's any news or anything. BBIG. Nope.
Wow.
Nothing that I can see. I haven't gotten any emails for. Wow. Wait, look at that go. Jeez.
Another candle just popped up. We had 2.7 million on that 5-minute candle, G. What the heck?
Whoa. 1.105, and then 500,000, another 500,000. Oof, good lord. Well, let's get it.
Fabio on YouTube is my kind of people. Says I'll be
I
pushing tomorrow with CPI report.
I mean, you're not wrong. Like I can't. I was gonna say I can't even. We've seen this movie so many times. It seems like.
Have we figured out if that 100% utilization on Ortex is an error yet?
I haven't heard any updates about it. Feel free in Discord if anyone has updated info. Feel free to let us know, or YouTube chat or anything.
Several of them, the memes are. I know there's other ones as well, but GameStop and AMC both jumped up to 100% utilization last night.
Ooh, GameStop just had a big break. Or okay, I'm sorry, not a huge break. Let me clarify, but a definite break nonetheless. Whoa, BBIG! Wow, that is still really aggressive.
120 for GameStop. That's good.
Yeah, GameStop had it was in that range, and it finally broke out of that 119.75, and it shot up to 120, 125 there for a second. So it's trying to push that daily range. Whoa, BBIG, my lord. You go, girl. Good lord.
Wow, Biggie's up 12, 13%. She.
Every ticker that I switch to is doing something crazy, and I just feel like I'm trying to keep the exciting ones on the stream, but like they're all exciting. But BBIG's definitely had a little hold my beer moment there. He's like, "Oh, we ripping? Hold my beer." Went for it. Page, if you're talking about the layout, it's a lot of our people who watch the stream watch it on like a phone, so I'm not trying to like scrunch it to the point where like no one can see it, if that's what you're talking about. Yeah, and we're still tinkering with things as well a little bit as far as how these are going to be laid out, so there's still a work in progress. This one was a little last minute, but
So I like this rhythm, right? So we get a little bit of a pullback, obviously following the SPY. Still, the day looks pretty good. Nothing has come out on news yet. So it seems like we might be able to run into the afternoon a little bit. Right now, again, we're going into lunch. Volume on a lot of these stickers are starting to slow down slightly, but the strong ones are staying on top.
it looks like Spy's right at its little at its uptrend right now. I'm really hoping that holds and bounces, so we can keep this little rip fest going.
Speaking of Ripfest, analyst Oakham and his play on Ford is paying out today too.
I was gonna say, I think in the mix of all the tickers that I've been running, I think that was, but yeah, no, that's looking quite good. Let me pull it up on here actually. Yeah, closed at about 1770, popped up to 1837 this morning, and it's holding around 1820. Still looks pretty strong too. Come on, SPY. Do your job. Make the things go up, please.
Looks like AMC's ready for round two, baby.
Huh. Yeah, so I just, I don't know if this is maybe what, Landisette was referring to, or whoever was referring to with the Ortex data, but True Demon just posted in here, I think with the intention of me kind of saying this to stream as well. He said, heads up, AMC's utilization is 100%. Most of these shares, about 69 million of them, have not been shorted into the market. Short hedge funds may be waiting to dump them in order to smash the price to suppress a run, or they might be expecting a squeeze and want to have a full arsenal to short at the top, which is interesting. Yeah, that being at 100% is it's definitely something if that's accurate.
Yeah, it would be a big change for sure. I know we had 100% back in like June, I believe. I think that's what we're waiting on.
Yeah, I think so, because it was always creeping in those mid to high 90s, but I don't think it ever quite tapped 100 since then.
Cost to borrow is going up. Days to cover is way up, at least for GameStop. All that Ortex data is steadily climbing for us. 22% short interest for GameStop as well.
Oh, looks like Adam Aaron just tweeted, actually. Yep, so
Uh-oh.
30 seconds ago. Importantly, we just hired a new AMC vice president, Ellen Kopikin. A bunch of brand management experience, grocery experience, PepsiCo, all these different things. So I think that, yeah, just another little, I guess, positive little piece of news he just released.
Ooh, BKKT is about to pop again.
Ooh, BKKT is going. So is BBIG.
BBIG, wow, that was just out of nowhere.
Man, BKKT is really trying to push this level right here. Let's see.
Ooh, there it goes. Bro,
Oh,
are you gonna
my.
run? What are you gonna do, BKKT? BBIG's catching the same bid. Let's go.
AMC is 1820 now. That's moving too. Yeah, damn. AMC's breaking out.
Ooh, AMC did pop, GME pop. Let's go. Bed Bath, what are you gonna do,
Oh,
buddy?
yeah.
Oh, man, everything's starting to fly here.
Yeah, intraday high is 122.93 for GameStop.
Oh, there we go.
No.
Look at that. I don't know which one to just focus on, bro. BKKT's running, BBIG, GME, AMC.
I know, I was just messing with my trading view to see if I could squeeze in another panel or two, but I have to mess with the settings. But, like, yeah, there's just so many tickers I want to have up right now. You know what, actually? I'm just going to shrink this down a little and open another window. Because this is getting pretty buck wild here. That looks terrible. I'm going to have to figure something out with this.
This is from Wrench Capital. Yes, AMC utilization is currently showing 100%. The last time we saw it around this level was April to May 2021.
Nice.
What's my sheep doing? Ooh, sheep looks like it's trying to pass my little trend line too. Ooh, let's go, sheep. Oh, sheepy, sheepy. Yes, sir. Beautiful day. Beautiful day.
Mm, mm, mm.
Yeah. AMC is looking froggy. What's it want to do? Pop or flop? Make it or break it?
I think we're going to be popping all day.
Yeah, it looks strong, dude. PROG is trying to bounce a little bit too. The spy's coming back. Here we go.
Hey guys, I'm back a little early.
Hey, perfect timing. We're about to rip.
I saw that MC started moving to 1820, and I was like, "All right, guys, I'm sorry, I have to leave this meeting. AMC is
Oh man.
like, I don't need this job anymore. I'm sorry. I wish.
I was gonna say, in my heart of hearts, I was really hoping you said something like that.
Oh God, if only. Maybe when we crack $80 again, I can make up my entire. I can make like 3 years' salary or something like that.
Right, as long as you take profits on it first. Just don't be diamond handing those options into into that talk.
Right.
Into
It's
the
like
ether.
I quite enjoy working here. Actually, this
This is my dream
is
job.
yeah.
I can't lie. It actually was my dream job. Like as a kid, like hacking for a living has got to be the dopest thing that anybody has ever done for a job ever.
I mean, just the
Just
title
my
sounds like I'm a hacker. Like you just get to
penetration
say that.
tester.
Like
No, I get to call myself a penetration tester.
that's even it saves some women for the rest of us, man. What's Boule oohing about?
I was like, penetration.
Oh yeah.
Just
there's
the
no
penetrate.
shortage of innuendo associated with my job title.
It's lovely to hear you talk about your day for that reason.
Anyway, hello.
Hey Dave, nice to see you in the stream.
Good to see you. Yeah, AMC is looking lovely. Yeah.
Oh, it's beyond lovely. It's
Almost
beautiful.
Everything looks great. Oh, did you want me to throw your screen back up, TD?
If you're ready to switch, yeah.
Yeah, I was just over here trying to. I didn't want to smush too many panels into one thing because I know a lot of people watch on phones and stuff. But I was like, there's so many tickers running, I don't know what to keep up. So I was just flipping through.
Right. I actually wanted to go in depth into an explanation for this timeline that I had set up. Because I had tweeted out about this earlier. So if we can go ahead and if we can go ahead and set up a clip here, we'll post this one on the main channel, not to the basement. We want to get this out to everybody that can see it. Cool with that, Kat? Yeah, yeah. I'm gonna go ahead and explain. I'm gonna go ahead and explain the timelines and everything, and how we came up with this chart and why we have a feeling that this run was coming. literally, literally to the day almost. All right, cool. Hey everybody, this is True Demon, the Devil Stockbroker. I wanted to give a bit of context in a video on my tweet from last night. I published this video, or I published that tweet talking about some of the indicators on AMC, specifically things like the unbalanced volume. And we talk about unbalanced volume a lot here. Well, for some reason, I got two of them. So looking at the OBV, what I was talking about earlier was that there's this consistent pattern in AMC, and you could check this on a ton of other meme stocks. This applies to BlackBerry, BB stock, GameStop, GME, Senseonics did this. So let's just kind of go down the list. Progenity did this. Setsens. There's a handful of others that I'm drawing a blank on now for some reason. But what I've noticed about these stocks in particular was there was this this behavior where the OBV would create a technical pattern, the same way as we look for channels and falling wedges and things like that in our price charts. I noticed a technical pattern uh, in the OBV. So that's what I was highlighting in that tweet, and I wanted to explain it a little bit here so that we can actually like illustrate it in a bit more detail. So here's the point in time when AMC was making its preparations basically for its very first run. This peak here was the first one in line where it had established a higher high after coming off of a low, and then swung back down, consolidated, and then peaked again. And like, keep in mind, these are a difference of like $2.50. Like this wasn't a huge price move. I mean, it's 100% compared to where it was trading, but considering AMC's chart in the past had been like in excess of $10, $20, it was like really oversold. So this first timeline stuck out to me because the OBV created a huge lift in it, a big peak, and we've seen this in other stocks where these squeeze plays are what we're targeting. So with the OBV, what I looked for, and I noticed a consistent pattern, was that OBV would peak and it would start to consolidate downward very slowly, but not keep up with the price until a sudden sell-off, which was a big scary sell-off. This would have been a roughly 15 or 20% fall over the course of this trading week, and the OBV came down to its lowest point right here that we have circled. And then all of a sudden, over the next 2 trading weeks, the OBV cranked up because volume came into the stock and buyers stepped in. The price lifted only about, it was only about $1.50. So if I were to draw a line from here to here, just to this high point on the OBV. Oh, I see. It was because the price was so low, down to $1.15. So it was like a 60% move. But the OBV, the point is that the OBV cracked through both of these levels, just like you would look for a breakout in a falling wedge. It broke down below and then cracked straight through both levels right away. And then immediately after that, the whole next trading week was a huge run all the way from $2.50 all the way up to oh, I guess I drew the lines backwards. I'll fix this. So the whole run altogether was 857% rise. If we looked at it from just the point where the OBV crossed or at least touch that upper level. That was 800 and 750. And from the point that OBV was clearly breaking out was about still 750. So there was plenty of entry points that if we were watching this OBV, that this would have been an opportunity. But nobody had context for this pattern because there's been no precedent. The whole time OBV moved with the stock, more or less, right? And that's what you see with just about every other stock, Microsoft, Amazon, Netflix, whatever. The OBV tracks with the price for the most part. Now, when we go on to the second timeline, this is from one peak to the next. So the first timeline that we drew here, from one peak to the next peak. This is the exact same thing. Second timeline is from peak to peak. And we have the same situation. Big sell-off. We establish a low and then swing back up to the top, swing back to the low, swing back to the top. It's classic wedge, right? And then at some point, there's a big sell-off that causes us to break through the bottom of the wedge, and OBV breaks trend. And for a moment, the OBV is actually moving with the price. This is actually a swing that perfectly lines up with the drop in price. But the thing is that it doesn't fall down to the same level as the previous swing did. And we're still trading at a balance that's, geez, like, this was at a negative balance of 100 million, and this one at this low was trading at an excess and a positive balance of 2.45 billion. And as soon as we cracked through both of those levels, just in a single trading week, cracked through both of those levels on May 13th, this would have been the buy signal. Now, I made a call out on May 25th when I saw us break through this resistance here because we were challenging the highs from the squeeze, and this was when I called out AMC for a big squeeze. But if I had been watching OBV at the time, I would have actually noted this pattern matched up with this. And we could see that we had a breakout earlier on May 13th. So with OBV cracking through both of these levels, we consolidated for one more trading week and then broke through to the new highs all the way up to the balance was 5.29 or 5.3 billion roughly. And the price went all the way screaming up to $72 at that point. And now we're looking at the final timeline, the third timeline, what's most recent. We have the same wedge setup with the OBV. This time we're in a falling, narrowing channel or falling wedge. I call it a channel just because it's not going to break below. It's not going to break below $5, but this is the same setup. Big falling wedge pattern. This is very timely. Okay. It's crossing this channel again, so this is just TradingView alerting me. So that's very timely. But I'll go ahead and get through this explanation first. So as AMC consolidated through this entire period, we hit our highest, our most recent high at $44 or $46 thereabouts, and then fell from there. What we ended up forming was a falling wedge. And ever since we broke below that, note what the OBV did. The OBV was going perfectly sideways. You know, it bounced around, but it was more or less sideways with supports, tapping supports each time. And then the final time that it broke through support, only in this last time with a huge surge of selling volume did the on balance volume finally break down below its previous lows. But again, it didn't break down past this point. It got close, but it never broke through it. And now buyers are stepping in. We've crossed up through into this channel once again. So This is an exact mirror of what we saw in May. And that's why this has my attention. We've been watching things like short exempt volume. We've been watching the moving averages to look for indicators that the price is moving in our favor. But all of these things have all been delayed. We've only gotten entries by doing that. We're usually a few days late to the party, and by that point, options are priced in, and they get really expensive really quickly. And because of that, we miss out on some opportunities. So now that we know this, now that we're looking for the OBV to do this, this is why I think that this breakout is happening. And there's an additional piece to this, and that's what these timelines are all about. So you note that I drew these timelines from peak to peak. First timeline is from November 24th all the way to January 27th, the day of the peak. And then from January 27th all the way to June 3rd, the peak in June. And now the third timeline. Where did this come from? Well, what I did was I took the first timeline and I multiplied it by 2. And what I found is that if I took these two timelines and laid them over top of each other and brought them to the peak, then they end right on the first day of the major surge. And then one trading week later, if I add one trading week, that brings me to the peak. And look at how these line up. So this would be a time. So if I multiply the timelines, the first timeline times 2, it matches up perfectly with the second timeline minus the beginning of the run. So if I add that trading week, that brings me to when the peak occurs. So now I'm speculating that if I take, since these are multiples of 2, if I take the second timeline, multiply it by 2, and then add 2 trading weeks, I get my third timeline. And if there's any truth at all to the cycle theory, then this might be it. Like, this might be the beginning of the run. And this is like this is literally like the most tinfoil hat theory that I've ever come up with. It's stupidly ridiculous. There's nothing documented in any trading books anywhere that I'm aware of that can talk about this or illustrate this to anyone. But seeing this huge move today really is confirming a lot of my biases. And now I'm just waiting for volume to come into the stock and lift this OBV through both of these levels. And what I've already got calls that are set for my price targets. I've got some calls for the early 20s, and I've got some additional ones for 30s way out in March. But like if this theory is correct, then what we will first see is we'll see a jump in the price. It'll probably go past $20, $22, something like that. The OBV will lift, and that will be a direct result of volume coming into the stock. So we'll see a big increase in volume. The price will lift a little bit being relative to where it's currently trading at. So I'm guessing like a 50% increase over the next 1 or 2 trading weeks. And then at some point in the middle of this is when we'll see some consolidation, but the OBV will be trading far above its previous levels here. And as soon as we crack through this resistance, it's pretty much out of control. And that sums up the entire theory that I have right here. It's strange how this has worked out, but it really does illustrate to me power that algorithms have in the market, because for something like this to line up so perfectly, this can't be random. This can't be a random occurrence. It just doesn't seem feasible to me. And the fact that we've seen the price falling so consistently while the balance of shares is so high and just refuses to move with the price like it did before, it only tells me that like these plateaus mean something, And it means accumulation, to put it simply, that institutions, whoever knows what the value of this truly is holding on to every share that they can get. And whatever shorts they're using to push the price down and then accumulate at the bottom and then let it run for a while, short it at the top, accumulate at the bottom, and then do the same thing over and over and over again until they can encourage or discourage enough retail traders to take their shares. And this has been the most severe sell-off that we've seen since. I really think that this is actually the beginning of our next move. I can't help but be extremely bullish and maybe a little bit not paranoid, but like this is falling into the realm of confirmation bias, where if I see the OBV crack through the top, I could be totally wrong. Okay, like don't just trust this because there's no precedent for this that I'm aware of. I don't know enough about the stock market or trading in general to tell you that this is some guaranteed theory. There's no such thing. But this is really compelling to me because the possibility for this to just be a random chance event is slim and none. So I'll invite the analysts to throw me some questions, or people in chat, if you want to throw me some questions and give me some ideas of what y'all are thinking about this. I really do want to know your thoughts, and please let me know what you're thinking. Fabio says my tinfoil hat is capturing 5G vibration, and we agree. Oh, yes, that is a good point. Utilization. So utilization on AMC is 100%. I actually did mean to bring that up. So AMC utilization, there was more than 69 million shares in lending volume that occurred yesterday. So it's basically 70. It's basically 70 million, but 69.96 million is just too nice of a number, right? But we'll say 70 million shares roughly were processed through the security lending program. That essentially means that more than 70 million shorts were exchanging hands, or borrowed shares were exchanging hands. I don't know that all of these were taken out or returned, but it looks like the vast majority of these were borrows. The return shares is like next to nothing compared to the borrows. The short interest altogether has not kicked in. So what I want people to be extremely aware of and very careful of is that these are borrows. These are not shorts. This only means that the security lending volume has been extremely severe. Somebody is accumulating borrows somewhere. Either these guys are buying shares to cover shorts and they are returning the shares, or they are borrowing shares, but we have not seen the price action reflected. The price action has not reflected covering, and the price action has not reflected shorting. So there's two possibilities here. Either they are preparing to cover and they're preparing to do it with other borrows in order to extend out their timelines for delivery, or they are preparing to slam the price with as many shorts as they possibly can. This is a signal to me that somebody or many institutions are borrowing tons and tons and tons of shares in a preparation to either short it now or very soon in order to crush the price and create fear, which is a very distinct possibility. We must be aware that that is possible. The other possibility is that they know something's coming and they want shares available that they have already borrowed and then are ready to make their sales and sell short at the top of a major move. Those are the two possibilities here. aside from them preparing to extend out yet another timeline, but this is like showing their hand. This is showing your hand at the poker table. And the only question is, how are the cards going to be laid out? We're we're at the river, right? If you play Texas Hold'em, we're at the river. It's time for the last card to be drawn. And these guys are showing their hand. They have all these shares that are ready to go. Who determines the winner is going to be how this next trading week plays out. So that sums up everything that I've got for AMC as far as short interest and the analysis goes. Again, I'm still looking for input from anybody, whether you're on chat in stream or if you're here in the Discord, or if you're an analyst. I'd love to hear the analyst's opinion.
So this is a question from YouTube. Jason Taylor says, March 95 calls, safe thoughts?
March 95. There's no such thing as a safe call, my friend. But if I were playing this in order to prepare for a move, I would be playing March, but I'd be playing closer to the money. And here's the reason why. So these previous moves, consistently, what AMC's price did is it would crack through the top of these channels, and then it would consolidate for a while. So there's an opportunity to scalp a trade here, but you should only do this if you feel comfortable with scalp trading like that, because there's a possibility that you miss out on a move. But the other possibility is that that you may be early, and you might burn your trade, and you might lose all your powder before it's actually time for it to go. So say I'm wrong. Say if this timeline is totally incorrect and the algorithm takes longer in order to push the price back up, or if it reverses. Maybe this is totally wrong, because there's only one precedent for it, and that's not a guaranteed correlation. That's just one previous occurrence. We have 2 times that the OBV crossed that we see it resulted in a big move. We have that, but the timeline, I don't have predicting this timeline. This is the first time I've done this, so we don't know that this will work. And that's what I'm trying to stress, is that there's no way to know. So for all I know, the timeline could be like way out here to August. Like, there's no way to know. But I am at least trusting that the OBV, when I see this cross, that will be my big signal. So each time that AMC did this, just look at this this little area here in late May. We had a big cross on the OBV, and then it consolidated. So if you buy your calls close to the money and you go out to like 30 days to expiration, you buy now, see it make its move, cross through. On the price chart here, that would look like something like $25, $26. So if you buy a out the money call at $20, or you do like a vertical spread or something like that, and set your price like 20, 25 vertical spread, something like that, you have a low cost average. You give yourself plenty of time to be correct. You give this plenty of time to play out. And if we get a big move, you scalp that trade, you take those profits, and then you roll out for deep in the money and give yourself lots and lots of time. That's how I'm doing this. This isn't a recommendation for how you should trade your money. This isn't any kind of financial advice. I'm just letting you know what I'm doing and why I don't think it's safe, or why I think it's dangerous to believe that it's safe to just trade a deep out the money call without seeing confirmation, because right now this isn't confirmed. I need to see the OBV up here before I confirm. And in order for the OBV to confirm this, we need to see a lot of volume, and the price needs to be going up. And if I'm just kind of eyeballing it right here, I'm guessing that when the OBV crosses, that the price will be up around here somewhere. because it's going to require us crossing up out of this falling wedge. I hope that makes sense. So the way that I'm playing this, I've got some call spreads for $20 to $26. That's my call spread, and I've got some long calls for March 18th. I've got that set for $30, I believe. So that's my option strategy. I got those nice and cheap. They're currently break even right now because I bought them a little early. I was pretty early on that trade. So we gotta see what it does here and give it plenty of time. But if we do get that confirmation, we see the price lifting, we see the volume coming into the stock, and we see this OBV make this cross, I will be sure to let you guys all know. You'll be the first ones to know, I promise you. Let's see. What other questions do we have?
Looks like we have one in YouTube chat. Go for trades. Demon, I'm watching the flow for calls, expecting a big uptick in calls to come through when it's go time. Do you think this is a flawed hypothesis?
Run that by me one more time.
He said he's watching the flow for the calls, and he's thinking there's going to be a large uptick in just like, I guess, overall call volume when it's time to squeeze, so to speak. And he's seeing if you agree with him.
You'll almost certainly see a big move on the call chain. Absolutely. The same thing happened here. We need to work on getting our historical volume bot up here so that we can actually see what it looked like. But I mean, everybody was freaking out when this happened. Like when we suddenly shot up on May 13th, like everyone was like, oh my God, it's going to the moon. And everybody was so excited. And then it started to consolidate. And then everyone's like, God damn it. And it's just everybody flips the keyboard and punches a hole in their monitor. Like everyone thought that this was the squeeze.
Yeah,
so I mean, like that call volume came in so late, and then everybody was buying here all throughout this period, and they were so ready to go to the moon. And well, they were wrong, and it didn't happen. And the Friday calls expired, and everyone was so disappointed. We gapped down the very next Monday, and we're like, great, they started it all over again. Here we go. And that's how everybody felt. I remember it very clearly. Kat, you can confirm when we were in Matt's channel watching this whole thing happen. Like everyone was so pissed. But that's why I say, like, yes, the call volume will be there. It will absolutely be there. But that's why you want to be early to this. And you set yourself with a nice, close to the money trade with a far out expiration. Give yourself plenty of time to be right. And then if you are, then we should be seeing this thing trading above $25 before we get our confirmation. And if you see that, if you go in the money with that trade, then you're like, great. Now I have some money for the real move. Go ahead and sell to close that trade and bide your time and wait and wait for that consolidation. Get yourself at a good price. If this happened twice now, it's happened twice. With AMC, that big move that it made, it was a 50% move here. It doesn't look like it looking at the chart, but from 150 to 250, that's a big move, huge move. And then it consolidated for a couple trading days. And that was an entry point. Like that was an entry point. It happened really quickly then, but notice that the second time that it happened, big move, one full trading week. It took a whole trading week. This one only took like 2 or 3 days. This one took a full trading week for it to develop. And it started at the end. It started on a Tuesday. A bunch of options expired out in the money on Friday. We gapped down and then moved again on Thursday. And then things really started to take off. And that's like at this point, like just look at the OBV. Look at how this lines up. The OBV cross back here and it peaked here. And then you had the consolidation. And then the next time you saw the OBV move, let's see, the price made a 30% move, but the OBV went up by a full 1 billion shares on balance. That's a huge amount of volume. So if you're trading this, like if you're trying to trade this like as perfectly as possible, which is what I'm trying to do, and I'm not recommending this. I'm just saying what I'm trying to do. And I could be very wrong, okay? So really, really, really listen to me when I say be careful about this. I'm waiting for this move to crack through the wedge. I'm going to sell my positions, my close positions that are expiring soon when it does something like this. And I'm going to wait. I'm going to be patient and wait for consolidation because I know that they're going to do it. I know they're going to slam this thing with shorts if this big move comes. And they're going to look to dishearten people and disappoint them. So I'm just playing calls. I'm using this opportunity to accumulate shares while we're still trading $20, sub $20, get some close to the money calls, and I'm expecting those to go in the money fast. I'm going to sell them. I'm going to sell those calls. I'm going to grab those shares. I'm going to sell those calls, and I'm going to wait. And I'm going to be patient. I'm going to wait for that consolidation to take place and see what it does. If it tracks with this trend line here, or if it like trades a little below it, whatever. Whatever AMC decides to do, I'm going to be looking for that consolidation until that next volume pop. And when I see that volume pop, then I know what's coming, and I will make my trade. I'll have plenty of time to make my entry. I'll know what my price target is, and I'm going to have a really great cost average. And best of all, if this move happens now, and I've given myself until March to be right, then I've given myself plenty of time to go get some fresh dry powder. I wait for that consolidation, and I use all that money that I made in that trading week to go and buy all those options that everybody was like, damn it, now they're out the money and they're not worth shit. Now I get to go and scoop up all their options that everybody was so disappointed didn't work out for them. And I'm just going to go ahead and buy them because everybody likes to FOMO at the first green candle, and then there's an automatic top, and it gets slapped down at resistance. So that's what I'm waiting for. That's what I'm waiting for. Can I put PROG on screen? Yes, I'll go ahead and put PROG on screen. I'm sorry, guys. Here's let's see. There's BBIG, AMC, GameStop. GameStop's moving too. That's really nice. Let's see. What can I take out? Man, everything's moving. I don't want to let go of anything, honestly, because BKKT is like touching $7 right now. We'll go ahead and take BKKT off. I'll trust y'all in the Discord to scream at me if BKKT starts moving again, because right now, oh man, does it look nice. PROG. Here we go. All right, here's your PROG. I am excited about this too. I know we're at 195. Like all the confirmations and all the biases have been confirmed. I'm super stoked about this. We've got a really nice cup forming here. Nice big cup. I'm going to look for resistance here at $2, $2.25 thereabouts. We're coming close here, so there's probably going to be a bit of a handle at some point when we run into this resistance. But the OBV is also looking very nice, very, very nice. And nice, it's still flat, I'm waiting for that volume to come into the stock, but I can see it's starting to pick up a little bit. Really want to see the volume come back into Progenity. People are going to be upset. Like they're going to wish that they had gotten back into the trade, like they hadn't quit out so easily. I kept saying to everybody, you have to be patient. Have to be so patient. Oh man, these BKKT calls are making me so happy. Currently, I mean, I'll give you a price update. BKKT. I'm sorry, GameStop. I'm gonna move you for just a minute. No trading view. I don't want to have a broker account with you. I'm sorry. So BKKT, we went and bought. We went and bought down here somewhere. It was like $2. And I think we doubled down. Not $2, like $4.30, something like that. We doubled down after we had this first top and then consolidation around $5. That was nice. So I went and purchased. I purchased 20 $8 BKKT calls. You can check this on the stream from about 3 days ago. And BKKT, we got $8 calls for March 18th at an average cost of about 35 cents a share. That's $35 per call contract. Those are now priced at $1.20. A nice solid 250% gain. How's everybody else in the Discord doing with those? How are you liking BKKT? If y'all are in Discord and you want to help out the channel, come drop by in the YouTube. Show our friends some love on YouTube and let them know how you're doing with your BKKT calls. Big shout out to Savvy Trading for spotting that trade very early on. He called this out back when it was trading at like $5 here. We saw this consolidation. I remember he called this out to me in early January or maybe even late December. But he was saying to watch this one, and I felt a little bit salty because it kept selling off. But he was right. He did make a call on this one, bit early on the trade, but he definitely had something. So thank you, Savvy Trading, for that call out, and thank you, Mr. Boulay, for the call out on February 4th. Do I have a price target range in mind for the AMC markup? I don't actually. So I don't work in price targets at all. I work based off of technicals and the moves that are made. So if I see AMC making its big move, honestly, I gotta say that when I see AMC making its big move, what I'm probably going to end up doing is I'm going to sell those calls if AMC does anything ridiculous, like it cracks past $80. I'm going to start unwinding my calls. I'm going to be hanging on to my shares no matter what happens. Okay, I'm going to be hanging on to my shares, but but the $80 mark, if we start cracking past that, or 70 even, like if we start seeing the previous highs of the squeeze, I'm gonna be unrolling those calls from that point on, probably about 10% at a time. I'll be unwinding those positions and selling 10% of my position at a time. Um, a lot of my calls right now are at $30, but what I'm planning on doing is, I'm going to take profits at the first sign that we like crack through that wedge, which is not currently drawn here for some reason. I'm not sure why TradingView has taken that away from me. But it's somewhere around $22. If we start to see AMC make this move up to around $20, I'm gonna wait for it to make crack through that resistance, and I'm gonna look for it to start making consolidation. I'm gonna sell those calls probably around between $25 and $30, and I'm gonna wait for consolidation. I'm gonna wait for those options to get cheap again, and for people to get all upset and bent out of shape because the price didn't continue to go up because they think that stonks only go up. And when that consolidation happens, I'm going to scoop up some more out the money calls, and I'm going to set myself up for, depending on where we are, maybe out to April quarterlies. But it's all going to depend on where this trade happens. But I'm going to set myself up for 30 to 45 days till expiration. And I don't know what price it's going to. Like, I'm not even going to try to speculate on that. There's no way to even know. Hell, I don't even know if it's going to squeeze at all. Like, nobody knows. But if it is going to squeeze, I'm going to be watching for like something ridiculous. I'm going to see these stupid moves, and I'm going to start unwinding my position 10% at a time. And I'm going to patiently unwind my position. And as I take that money out, what I am also going to do is I'm going to sell calls for a very far out expiration, like more than a year. I'm going to be selling calls for more than a year out, and I'm going to wait for that price to relax. I may even buy some puts to protect myself. Um, the way that I'm playing this is with what's called a collar strategy. Once a squeeze occurs, you sell calls, you sell covered calls at the top, and you buy a put at the same strike price. And I'm gonna sell the calls and buy the puts for the same strike price with like 365 days till expiration or more. Like it's gonna be really far out. And what I'll be waiting for is for the price to come crashing back down because inevitably, when a squeeze happens, the price relaxes and the volatility goes away. When that volatility goes away, I'm basically going to buy to close those covered calls so I get to keep my shares and I don't get assigned. Hopefully, those calls will go completely out the money and they'll be next to worthless. And I can buy to close those and I'll hang on to the puts until expiration. And the whole purpose for that is that if this cycle theory ends up working out, AMC may squeeze another time. Like I don't know, so I'm going to hold on to those puts, or it might come crashing back down, and it's the movement is a huge success, and everybody becomes millionaires. I'm going to make myself a multimillionaire by exercising those puts because I'm going to buy a bunch of shares when AMC's price comes crashing back down to a regular level, and that'll be my strategy. And I may even continue selling calls on the way down as the price continues to fall. Like this whole cycle may end up repeating itself for all I know. And if I start to see that kind of thing happening, I might try to, be extra special smart and turn myself into one of those, I don't know, like conspiracy theorist traders that's able to see all the numbers just with my mind's eye. But I don't know. Timeline recommendation for calls on Progenity. Progenity's already looking really strong. I already sold some calls that I had previously purchased. I had some $2 calls. I sold those at when it cracked 180 the other day. I was expecting it to consolidate for a couple more days, but looks like I was wrong. So but I'm not worried about that because I still have I have I have more than 100 contracts. Okay, I'll just tell everybody I have more than 100 contracts, call contracts in Progenity for $2 and $3 strike, and those are expiring in April. I bought April quarterly. Um, and I also bought leaps. So like over 100 contracts total. 50 of those are $3 strike for April 14th. 30 of them are $2 strike for April 14th. And then I have 10 contracts for January 21st, 2023, and 10 more of 2024. So for a total of 100 contracts in Progenity. Good for a grand total of 10,000 shares. 10,000 shares in total. That's what that's all worth. If they all go in the money. So I told y'all, I'm long on Progenity. I'm not going anywhere. I have faith that this thing is going to go to the moon. I just think it's going to take a while. So I'm planning on holding this for a long, long time. But I think the $2 strike, like right now, like $2 strike to April, I think that's safe. I feel really good about that. That's a good trade. The $3 are a bit more of a YOLO, but I mean, look at this. Like we're starting to form a cup. So like if that ends up coming to fruition, then over the next couple of months, we may see $6 again. And then all of those calls would be in the money. Hell, I can sell half and exercise the other half. And I can I can make a huge amount of money just trading the shares. So I'm looking for Progenity to make its next big move. They've got a ton of patents that are on the line, and my calls don't expire till April. Like I'm feeling so good about that. That gives me almost 60 days till expiration. That's more than 60 days actually. We're still in early February. That's more than 60 days to expiration. It's like 70 days to expiration. I am so comfortable with Progenity. PROG makes me feel all fuzzy inside. You can tell everybody on Reddit I said that.
So, Demon, today the Boston Fed said that we're looking like there's going to be more than 3 rate hikes this year. Obviously, the SPY was pushing and is still kind of solid and strong, and most of our meme stocks are moving along with it. If we get those hits, what do you think could be one of the contrast plays or contrast moves that they might do?
So if there's a big move because of like inflation and rate hikes and things like that, what I'm actually looking for is to short the housing market. Um, so this is a bit difficult to do, but let's explore this. Let's explore this idea. I've talked about AMC a lot. Everybody can see what's going on with their chart. So I'm gonna take this one away for a little bit to explore something. I'm looking at stuff that's going on in the housing market a lot, and you can try to counter with long plays, but if there's a overall downtrend in the market, like you're way better off going with the trend. Um, and I'm sorry to say, I'm very bearish on the market overall. I think shit is about to get really, really nasty really fast. And there's signs, there's signs. So I'm going to look at iShares of MBS ETF. This is a Vanguard ETF that trades against mortgage-backed securities. And if you've watched The Big Short, you probably have some feelings about mortgage-backed securities. You've probably heard about that. I was looking to maximize this pane, but it doesn't really want to for some reason. Oh, I see. It's maximizing the whole chart. I gotcha. Oh well. I'll just stick with this for now. So MBS, mortgage-backed securities. Mortgage-backed securities are the device that was a device invented in the 70s in order to basically create a profitable device that trended with the value of mortgages, hence mortgage-backed security. It's an asset that its value is derived from the value of a bundle of loans on homes. And if the value of the homes goes up and the value of the mortgages go up, then the value of the MBS goes up. And the holders of the MBS will make dividends on those premiums and the interest payments, and they get a cut, and that's the dividend from MBS. Now, if you recall The Big Short, in 2005, the housing market started to make some serious moves that were very much against that were just unexpectedly the moves being made in the housing market. Basically, all the prices of homes were getting hyperinflated, and you can't see that reflected in the MBS ETF because it was like brand new. But if you look at like the SPY or something like that, all throughout the period of 2005 to 2006, there was a huge bull market. Everything was just roaring and ripping, and everyone was super excited. And housing was no different. People were able to afford homes that they had no business buying. And what ended up happening is a lot of people were getting subprime loans that were getting rated way beyond the rating that they had earned. Let's go look at the SPY so that everybody can see what actually happened in the market during this period. We're actually going to talk about, we're going to talk about The Big Short. We're going to talk about all that. So if we look at the SPY, going all the way back to, probably have to go to a weekly, actually, for this to make any kind of sense and show all of this. So this was 2008. This was 2005 through 2007 right here, this period right here. Big bull market. You see a lot of green here. Everybody was making stupid money. The market was strong. The housing market was very strong. And everybody was making a ton of money on mortgage-backed securities. And this was because banks were trading these securities with the goal of selling these bundles of mortgages to the government. Reason being is that the government back in the 1930s, in order to save the economy from the Great Depression, Franklin Roosevelt instituted mortgage-backed home loan program for individuals. The purpose of that was to allow people to get a government subsidized loan so that everybody could buy a house. And then when people bought a house, it established security for every American citizen. And it started to restore balance to the market, and it recovered almost overnight. Over the next 4 years, the American economy was restored fully. And then shortly after that, we entered World War II. So by the time we entered World War II in 1939, like the U.S. stock market was like ready to go again, and everything was fine, and the Great Depression was over, and it was all looking good. And then Pearl Harbor got bombed in 41. So the the point is that loan buyout program was what drove the mortgage-backed security, because what banks could do is they could get a bunch of loans and they could back them the government, and they would get a cut. They would get a kickback for all of the loans and mortgages that they held, because they were assisting with that home loan program, and they were enabling people to get homes. But the government wasn't regulating it, and they didn't realize that the banks were issuing loans. The small banks, very small banks, were issuing loans that gave people access to like $500,000 homes when they were working minimum wage. And it doesn't make sense, because the interest payments rapidly exceed your gross income. And that's even before tax. So after tax, people were screwed. So people weren't afford to make their mortgage payments or keep up with rent, and it caused a lot of problems. And the rising default rates, this is when Michael Burry caught on to it, was in early 2005. He realized that the default rates were going to rise on those loans. And what was happening was all these bad loans that the little banks were packaging up into mortgage-backed securities, selling them to the big banks, and then the big banks were getting a kickback for all these toxic loans that were going to die. And throughout that period, the market's ripping and ripping and ripping and ripping. And by the time they realized it in 2007, what they had done, they started to hide it, and the mortgage-backed securities became hyperinflated in their value. And this was that period when there was a brief scare, and then we're like, oh, it's fine. We're just going to repackage the loans into consolidated debt obligations. So they took a bunch of toxic securities that were all dying. They repackaged them and called them something else. They called them consolidated debt obligations, or CDOs. And then they said, it's great. They're rated AAA. It's all fine. And then suddenly the price is going through the roof again, and they were still the same bad loans, and the default rates were in excess of 20%. 20% of every mortgage was going into default across America. And the prices of the homes were skyrocketing anyway. It makes no sense. It makes absolutely no freaking sense. But then finally the reality hit in the summer of 2008, and the value of the mortgage-backed securities all crashed completely. They tanked overnight. And the same thing happened in 2012 with the recession that took place then. There's just a whole lot of nastiness. But what I'm getting at is that if I'm betting on something happening in the market, is I'm betting that the housing market is going to tank first. And if you compare a chart for the housing market overall, TradingView has this. You can look at other things like the value of homes. Let's see. There's the Fred database. The Fred So the supply of homes there's the housing supply, and then the God, I wish I had the actual Fred database chart for this. I can't seem to find it. But when you see the supply of homes skyrocketing and the market is still ripping, like that's actually the time to short it, because when the housing supply skyrockets, right now it's at 6 months, which is a healthy supply. But just wait, people are going to start going into foreclosure. There's going to be a rent crisis because landlords all got smashed because of the COVID crisis, and they weren't allowed to collect rents or evict people, so they just had to eat all their losses. So a bunch of them just sold their properties and just gave them up. So there's no landlords for people to go and rent from. There's going to be tons and tons of houses on the market, but nobody will be able to afford them because the Fed is about to raise interest rates. So nobody's going to be able to afford the 10, 12, 15, whatever the interest rate goes to on the loans, because they won't be able to afford the 20% down payment on these ridiculously overpriced houses. Nobody's going to be able to get rid of them. And then all of a sudden, you're going to start to see the housing prices fall and fall and fall and fall until they're in total free fall. And then people's equity dries up. They lose their people start losing their homes, and it becomes a disaster in a real hurry. And because of that, I've noticed that ever since the COVID crash, where the MBS ETF was ripping, as soon as COVID crashed and then recovered, it's been in free fall ever since. The MBS market has been falling nonstop, and it's not a good look. It's not a good sign. I'm sorry that was a little bit long-winded. We kind of went down a really deep rabbit hole, but I hope that answers your question. If you're looking to make a trade against the market and you want to continue to go long on different stocks, you want to actually look for negative beta stocks that are unrelated or not tied to the market itself. Everything is in some way tied to the market, but if you look for stocks that will be able to continue to perform during a bearish market, think of what people buy during hard times. You'll probably want to invest in stocks of what people are going to use to get out of their homes. Like one of the biggest things that ripped during the 2008 subprime crash was U-Haul, because they offered moving trucks and storage. So it gave people a way to get their stuff out of their homes and get it stored, which it's awful to bet on something like that. But it's true. If you look at U-Haul's price compared to the SPY, U-Haul recovered 400% before the end of 2009 after the initial crash. Like it crashed too. See, it's Amoco, sorry. Amco. I need to look for the Amoco. I'm trying to remember what U-Haul's stock ticker is. It's something else. It's not U-Haul. It's like Amoco or something. Let me go look this up really quickly. Amoco. Okay. U-Haul. There we go. So go back to the weekly. Let's go. Here's the subprime crash. This is when people started losing. This is when the default rates were starting to go, and people were the market was getting kind of nervous. The market overall was doing really well. U-Haul was going through some hard times already by the time the crash occurred, and then when the crash occurred, it fell by about 50%. But then all throughout 2009, it rebounded completely, and U-Haul's been on the rip ever since. It's not gone anywhere. So if there's going to be another crash, like something like U-Haul, you could also invest in stocks like CubeSmart or Express Storage, Extra Storage. There's a couple of other ones out there that are publicly traded. Not too many of them. You could also invest in CAR. That's Avis, ticker CAR. They also own Budget Truck, which is that's a big moving truck company and truck rental company. They've got lots of They've got lots of supply, and their company is doing well. I think they bought out some of their competition as well, even during the pandemic. So Car's been doing really well. They actually squeezed, as a matter of fact, if not mistaken. Um, so the other things that you'll look for in a bad market is buy something. You would buy stock in whatever company is going to provide what people on the streets are going to need, like bare bones essentials. So like dollar stores and Walmart, like Walmart, Dollar Tree, Dollar General. Uh, those companies do extremely well during hard times because nobody can afford anything. And inflation is going to really kick people in the ass. So cheap goods is probably what's going to keep people alive. Um, it's really sad to be discussing this kind of, but like that's the reality of the situation in which we find ourselves, of how this market is. Oh shit! Do me a favor and cut that out in post, man. I got to make sure that doesn't show up. God damn it! Let me stop the stream for just a second. I'll be right back while I go and fix something.
So we got more news out of the SPY. The Cleveland Fed, um, let me see her name, Loretta Meister, was upbeat about the economy and said that the nation should be able to bounce back quickly. So she's supporting moves to accelerate the balance sheet wind down. Again, this is on the back of the Boston Fed saying this morning, hey, the rate hikes might be more than 3 this year. So just keep an FYI.
Thanks for the heads up on that. Nah, it's not a big deal. I just realized what I was showing, and it's not that big of a deal. I thought it was something, but no, it's not a big deal. It is probably just it was one of my other browsers, but there was nothing on it. I thought that there was something in it that was really bad, but not a big deal. It's all good. Okay. All right. Let's go take a look at AMC again. That chart looks hilariously scary when I put it on weekly. Okay. AMC. What do? Let's actually just look at this without the... Let's look at that without the OBV for a little while. MACD's nice and all, but I don't think it's doing anything for us. Ooh, BBIG, what are you doing? 340. Oh, really? Oh, I see. It touched 355. The candle made me think that we were going past 355. My bad. It's still looking strong. I'm really liking it. We're cracking through this resistance, getting ready to go and challenge 350. That's nice. Let's see, what else am I missing? Derek Blakely says, I have calls for PROG $2 strike. I bought a couple of weeks ago for 3 cents and expire as 18 cents calls, 3 strike for February 18th at 35 cents. Would you hold a little longer or take profit now? 10 of each. I'd probably take profit now, honestly. And I would roll out. The Progenity is looking really nice, but I think that the big moves are going to come later on. So even though we might see a bit of a move in the short term, I think that you're probably good to take profits now and roll out. You could roll out right away if you wanted to stay in your position and try to stay neutral. You'll also probably get a little bit better fill if you go out by a couple of months because you'll be less subject to volatility. So you'll get price closer to delta, or more based on delta. So that actually would be pretty nice. You could go as far out as like April and still get a really good fill. The you'll probably get fewer calls by doing that though, just because you're buying a lot of theta. But by giving yourself that time, you give yourself more time to be right. $2 is kind of an area of max pain right now for February 18th, so it's a little you're taking a gamble when you're doing this. There's a chance that they may be able to pin it here. So you want to give yourself the best opportunity to be right. So I'm always a fan of buying more theta. See what it does before close today, and maybe give yourself a chance to take some profit if you see it ripping. If it goes to like 225 or 250 even, then that's when I would take profits, wait for some consolidation, and then buy that dip. That's how I would be doing it. I just sold my $2 calls in Progenity for February 18th expiration yesterday, and I did so in the afternoon, right after we peaked past $1.80. I was expecting consolidation today, but didn't happen. So congratulations, you made the right call. And if you're interested in taking some profits, probably do it today before theta starts to ramp up too quickly. But yeah, see what it does. Give yourself until the close of the bell. Maybe we get some more momentum out of this. Let's see. What's BKKT doing? I don't know why TradingView keeps wanting to send me this panel. I really want it to go away. Okay, BKKT, show me what you got. Ugly chart. I'll fix that. All right. Very nice. I do want to look at the OBV here just to see where we're at. Nice, 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 nice. We're actually just about ready to crack above our previous high on the OBV. Oh man. Oh man. Cat, hold me. I'm getting too excited. There's an 8 million volume difference. And we traded 9 million volume, 14 million volume just in the last couple of hours. God. BKKT, you got me so excited. Please don't play with my heart.
Yeah, BKKT's been pushing strong all day.
Yeah. Oh man, this is exciting as hell. Look at that. Look at that volume. Now I see why everybody gets so excited about volume. I'm going to go out here to the daily on this and see if we can draw ourselves some technicals on this. Not really. Man, just seeing where we are on the daily gets me so excited though. Okay, so balance on The OBV here is 237 million. We're at 199. So I want to set myself an alert. This is how I use OBV to help me with picking my levels. So I'm going to set this alert at 235. Okay. I'm going to create an alert. I'm going to go ahead and alert the Discord here. Give it the ticker symbol and the closing price on the candle. And I'm going to set this for, we're going to do 230 million. There's my alert. And then I just need to fix this so that it actually reflects 230. All right. So 230. If we crack 230, we're moving. We're moving, grooving, and cruising. Now make BBIG run to 40. If I could, I would. Trust me. I don't know what BBIG is going to, but man, 40 would be nice. That would be really nice. I don't know what it's going to go to. I'm feeling like $20 is in the realm of possibility, but yeah, I don't know. It's hard. It's hard to say. These big wedges or these megaphones are so unpredictable. But I've got this fib here, and I trust fib to tell the future. Remember my tweet: fibs tell the future. BKKT going back to make a run on $7 again. That is what I was hoping for. Let's go check out the 30-minute. All right. Yep, making a run for $7. Let's do it. I really, really want to see us crack $7. We're getting really close to our strike price now. I've got my strike price set at $8, and we got in this position back at 430 or so. BKKT got a nice early play on this one, thanks to Mr. Boulay and Savvy Trading for getting this play in front of our eyes. Logical Chaos. Can I take a look at Mavis? Yeah, we can look at Mavis. I'll leave Progenity, BB. Man, everything's so good. I don't want to get anything. All right, we're just not going to discriminate. We're going to go to one chart, and we're going to go take a look at Mavis. Yep, just like BKKT. Moves with Bitcoin's price. Interesting. Big peak here, peak here, peak here, peak here. Interesting. There's a little bit of correlation with the price, but this was inverted. That's interesting. There's a little bit of inversion with the price. That's so strange to me. It's like when it was moving with Bitcoin back in 2000, 2020 and early 2021, and then it started to move against Bitcoin. And it was doing that for a while, and then just now for this last couple trading weeks, it's moving with Bitcoin. That's really interesting. I wouldn't have seen that if I hadn't just so happened to have Bitcoin also on the chart, but that is curious. That's very curious. All right. Oh, look at that. The OBV. It's doing the same damn thing. I gotta say, I love that I added OBV to my chart indicators because it really shows me some insightful stuff when it comes to these squeeze plays. Let me go take a look at my Ortex data. I'm gonna take a look at Ortex. I'm guessing that my Ortex chart is not showing up on stream. I must only be sharing one window. Oh, okay. I think that makes your job a lot easier with post editing, Cat, because I I went back in the stream and I looked at what I threw up there. Oh wow, utilization maxed out at 100%. Where did that come from? Oh wow, that's pretty damn identical to what AMC's doing. Ooh, now I'm curious. I'm real curious. Let's see. Do we have Verde in here? Verde is not here. Todd's here though. Todd, if you happen to be available, or Occam, if you're willing to help me out here, would you kindly make a ScourgeBot query and tell me what the inspect shows on short exempts from November till date? I just want to know what short exempt volume has looked like and see if there's any anomalies in the short exempt volume, and let me know what you find. If you have any highlights, I'd love to show it on stream because there's very interesting stuff happening here. Wow, even the failures to deliver spiked. Thanks everybody. Thanks everybody in the Discord for continuing to feed us plays and talk us through this stuff. Really appreciating it. Um, I also think that the setting up the live stream questions in the chat separately has been working out pretty well. It's helped out a lot. So I'm Clint Eastwood says, "What's the best way to be patient? Some of us let FOMO kick in." I don't know, man. It's like getting control of your emotions. Drink less coffee, I guess. I'll never do that, but do as I say, not as I do. Check out Uber. Oh, thank you, Occam. This is an interesting play. Let me finish this review of MVIS, because right now, like this borrowing here, this lending volume is really interesting. This really has my attention. Like, I'm trying to understand what exactly this means here, but just a sudden surge of, geez, security lending volume, 136 million, 12.45 million. Wow, that's crazy. That's more than double. That's more than double what it was 2 days ago when it peaked at 5.5 million. That's interesting. I'm Sorry, I wasn't showing my Ortex chart. I don't want to keep having to switch between windows, but basically what I was seeing was at this period, right around early February, MVIS had about 5.5 million shares in security lending volume. That refers to shorts exchanging hands, or at least borrowed shares exchanging hands. And then just yesterday, the utilization shot up from 80% all the way to 100%, totally maxed out. And the security lending volume was in excess of, I'm gonna double check what that number was actually. That was 12.45 million shares. So by comparison, like it was more than double the amount of security lending volume. And the only other time in that in this stock's history that we saw that kind of security lending volume was during the period where it was getting absolutely smashed, like just getting repeatedly reamed by hedge funds when it was going from it was late June, like June 10th, and the price was being hammered from $22 to all the way down to $13, $14. So this entire period here, this is the only time when there was that much security lending volume going on. Now, security lending volume is in and of itself is not bearish. It just refers to shorts exchanging hands, or at least the borrowed shares exchanging hands. So this could be a sign of covering, or it could be a sign of it could be a sign of shorts pulling up inventory of borrowed shares, just borrowing and borrowing and borrowing, but they haven't sold short yet in order to prepare for a big short position. And the only reason you would do that is if you know that there's going to be a big major move coming, or if you know that there's going to be bad news and the stock is going to go down and fall. So, depending on what happens here, there's either going to be a massive cratering of the price. It's down below $4 right now. I don't see that happening. If the price moves, makes a big move, though, they can use those shorts to hammer the price and suppress it. So this may be a bid to control a huge move that's about to occur, and they want to maintain control of the stock, or they want to short it at the top, and they want to create a short position at the top of a major move. So I'm a little bit late to looking at this, Occam, but I'm looking at your unusual whales uh, flow for that Uber play. I'll go ahead and show this briefly on screen. So these are interesting. The underlying stock is at $39, and there's some huge pulls on calls for 39, 41 dollar strike calls for just 2-day expiration and 9-day expiration. So this could be, in my mind, this could be somebody just buying to close their positions. Since I see a lot of these are not marked as buy to open. It's possible that these may be just closing out on open calls that were sold earlier on. I'm curious what their stock price is currently trading at. I'll go back to my chart. Let's check out Uber. Interesting. So Uber's making some moves. Somebody's probably speculating that we've had a double bottom here. It's established lower low, 1, 2, 3, 4 lower lows. Let's go draw this out. Definitely a falling wedge. Very long falling wedge. Very long falling wedge. Interesting. Okay. So this thing may be making a move here to to this next resistance here at around 42, 42.50. Interesting. That's funny how Uber keeps making these perfect little zigzags. It does it rapidly. It makes these really fast climbs. So if somebody's expecting a big move here, I'm guessing that they know it's coming fast. If they're going for the February 18th expiration, this could be an opportunity for a quick scalp trade. We shall see. But good call out on Occam's DD for Uber. This premium is it's like greater than 72,500 orders for Uber. OTM only on the ask side, single leg only, less than 15 days to expiration. So there's a lot of bullish volume for the next 9 days. So if you're looking for a scalp trade on Uber, it's apparently looking very strong, and the options volume backs up that claim. Let's see. BBIG. We'll go ahead and we'll go put our charts back on here and go look at everything again. Okay. And then pretty soon here, I'm probably going to need to take a break for a few hours because I unfortunately do have to do work. I know I still have a job that isn't YouTube. Oh, wow. BKKT broke out above $7. That's really nice to see. PROG touching $2. That's what I'm talking about. $2 is a big resistance for us. So now that we're touching that price, I'm really expecting consolidation here. I do feel that it's going to drop the price a little bit. So I'm not going to make any changes to my position. I'm still going to hold through this just because I've got a lot of time. There's no point in me trading volatility right now. My options are not going to change very much on volatility just from a few cent moves. But if you're trading close to expiration, Progenity, this is a big opportunity to look for this resistance here, see if the price gets smacked down. That'll be a re-entry point. But if we crack through $2 and we start trading a few 100,000 shares, maybe even a million or two above the $2.05 mark, I would say we might see some action from Progenity going into the close of the day. Can I look at MMAT? Yeah, absolutely. Take a look at MMAT. Double check all this stuff. BBIG still looking healthy, happy, and strong, just as a big growing boy should. But I'll make my own sound effects until we get a soundboard here. Nice. All right. Let's keep an eye on that volume. We'll put the OBV back on that chart, and we'll look at what the OBV is doing on a close time frame. It's definitely curling. I like it. I like it a lot. I like it a lot. Let's put a pin in this, and if OBV crosses, let's see, we're at getting close to 950 now, or at 850. Excuse me. I'm gonna mark this at 880, and we'll set an alert for this. $860. I like that better. We'll set that there. Add an alert. Crossing up. We'll only do this alert one time because I get tired of deleting my alerts. That's what I want to see. So I want to see an additional 17.5 million, roughly, shares on balance added to the OBB before Progenity makes its next big move. I'm guessing that if we start to crack that price, we'll probably be trading somewhere around in the area of 230, 240, somewhere in thereabouts. And at that point, like that's the time to get excited, and that's the time to start looking at some close to the strike calls for near expiration. So something like early mid March. I would play it after earnings. I would set your expiration after earnings because big moves happen around earnings. So set yourself up carefully like that. Just be aware that that is happening. Uber earnings today. Ooh, savvy. Now you've got my attention. Thank you for pointing that out. Man, you got me wanting to close some of these calls. BKKT has been treating me so good. I will play Uber. I will play Uber. I'll go ahead and I'll sell a small position in my BKKT calls because it's up 240%. Jesus. Like I cannot complain about that. I'm still holding 10 more calls for a BKKT $10 strike. I really want to make sure that I'm being cautious and being careful. I mean, taking out a third of my position at 240% profit is not bad. Not to toot my own horn. I'm feeling good about this market today, guys. The meme lords are with us. All right, Uber. I'm going to trade a call spread. I'm going to go a little in the money. I'm going to sell a little out the money at 41. My max profit will be 100%. Perfect. Great. So, okay. So I'm going to play the Uber earnings. I'm willing to put down what the hell? I'll risk half of my BKKT earnings. We'll throw $300 down on Uber. I've got a $39, $41 strike call spread.
I'll just say
That's expiring next Friday, not this Friday. Next Friday, February 18th. You have something, Dave?
going to say BKKT looks like it's pushing through the high of the day with some volume.
Yeah, no, I'm watching it happen. I'm watching it happen in real time. I'm super thrilled with the price action. But I don't feel bad about taking profits here. Like if you got in early with us, like this is a great time to take profits. You should be up. If you got in at the same time that we did, and you followed and if you follow the trade for the $8 strike, then you're rapidly approaching in the money. You should be in excess of 200% profit right now. Okay. AMC, man, $18. Ooh, AMC. AMC's got me so excited, man. Take a look at this on the daily. Just to remind ourselves of where we're at with this OBB. Look at that OBB curling up like that. I love it. We gotta see about 3 times as much volume in order to really get this thing moving in the right direction. We need to see in excess of 100 million volume on balance. Currently, Let's see. In 3 trading days, we moved by. In 3 trading days, we moved about 300 or 200, sorry, 200 million shares on balance in volume. And then we kind of created this little cup and handle, the cute little cup and handle on the OBV chart. So I'm looking for this to make its move and for AMC to start screaming back towards $20 or so. I've got a call spread on this one for 20 to 26 or 21 to 26. I don't remember which one. I'll have to look at it. But anyway, I'm bullish on AMC. Yeah, that does not expire until it expires next Friday. I'm done. But it's still doing really well. AMC's making this one come back in value. I was down 50% on that call spread. I was thinking about getting out of it, but then all of a sudden the OBV turned around. I'm like, ooh, all right, now we're talking. Virginity still testing $2. Lots of resistance here. Not that worried. BBIG at 350. Let's go review our fun plays. BKKT is also on this chart, chart platform here, just because these are all crypto plays basically. A lot of these are very tied to crypto. DWAC not really moving today. It's pretty much flat. Funware is also not really doing much. Pretty much flat. It gapped up slightly today, very small gap up, and it's given back those gains. So these are kind of moving sideways. But we expected this consolidation, so we're not at all upset by this. We've got our position set. We're bullish to. Let's go ahead and review my plays on DWAC. I have a long call for 135 expiring next Friday, so I'm playing that one pretty far out the money. But it was a really cheap call, and who knows? Maybe it goes to the moon, maybe it doesn't. But I figured, why the hell not? See, the other one was no, a PayPal. Our PayPal play. I almost forgot about PayPal. PayPal's doing really well. And of course, Bit Digital and BKKT, basically the same play. Their charts look very, very similar. Not exactly the same, but big peak and then a sell-off. BKKT kind of looks like an exponential decay curve. Hopefully, it'll turn into a parabola. That would be actually really nice if that were to happen. Bit Digital, a bit more linear in its peaks. So we see this wedge here, and it's basically a flat triangle, honestly. So we're looking for it to crack through this resistance up here. This will put it at around $9.50. So more than 100% of its current trading price. And if we can get that, if we can get this OBB to turn around and push through, this is a heavily shorted stock as well. So that one would be extremely exciting to see move. Let me catch up with the chat and YouTube. I'm sorry, guys. I'm still so bad at paying attention. Could I do a fib on PROG? I'd love to do a fib on PROG. I would love to do that for you. Let's see. No. There's Senseonics. I almost forgot about Senseonics. How could I? All right. Well, Senseonics is like killing it right now. It's going for that resistance right now. And when I see Senseonics break through this, I'm going to be looking for consolidation right now. The OBV is about to cross. It's going to get freaking exciting, man. So what I'm looking for, Senseonics, I've already got alerts set on this. When Senseonics crosses this, we're going to be paying close attention. Look for it to cross above this resistance. I'm going to close some calls that are close to expiration, and I'm going to wait for consolidation because Senseonics is doing the same thing that AMC's been doing. and I'm expecting FDA approval to come. So I'm going to close some of those calls, take those profits. I'm going to hang on to some of those. I've got leaps, and I've got a lot of calls expiring in March. Those are $5 calls for March 18th. I'm going to close half of them, and I'm going to wait for consolidation and look for re-entry. I'm going to re-enter at the same strike and the same expiration. Reason why I'm not closing all of them, who knows? It may just keep going. I don't know. I want to hang on to those calls just in case. That way it doesn't go without me. But I'm going to sell half of them for the opportunity that creates for me to catch a dip. And if the dip goes, then I will wait for the consolidation to happen. I will buy back into my position, go all in, and we'll see what happens. Progenity is over. Let's go ahead and just create a new chart for Progenity. Oh, you know what? I already have a fib on this one, actually. Or I should. Let's see if it loads up in here. That's the BBIG one. PROG. Here we go. Yeah, this is the chart that I spent entirely too much time making pretty. I'm going to delete some of these resistances because they're really dirty and they're just making a mess of things. Makes it way too confusing. Okay. Okay, I'm going to leave those two resistances alone. I'm going to lift the price, take my watermark out of there. And let's do I'm going to do a fib time zone because that is significant. I'm curious what the time zone will do for us. Ooh, I like it. That's a nice setup. Okay. So this is kind of what I was thinking with Progenity. That's funny. This lines up with my own personal thesis of what the price is going to do. But look at how these line up. We got a low to a peak, and look at this lineup. It's catching all the valleys. We got the valley here, then that begins the squeeze, and then there's a valley here, begins another squeeze, catch another dip here, begins the squeeze, catch another dip here, and we fell again. So now I'm curious what's going to happen here. This may not be the dippiest of dips. This was the dippiest dip. So now maybe we might see this thing scream towards the next higher highs. This actually kind of matches up with my own thesis a little bit. Or we may have started a new cycle. Who knows? But yeah, I'm getting pretty stoked here. We will wait to see what high this establishes, and then we might set ourselves another fib time zone. Let's go ahead and put a little fib extension on this one. We're going to go from the lowest low all the way to the high, and we're going to go back down to the lowest low. All right. So I'm setting the bottom of this fib all the way down here. So now our next major resistance, according to the fib, is at 245. That's pretty close to where I had guessed it, if I'm not mistaken, and it lines up with this chart as well. So I actually had set mine at about 240, 235 or so. So this is matching up pretty close. So I'm expecting big resistance to come through here. It might be able to crack through these little resistances that we had set based on previous levels. There was this zone of consolidation. That's what this was. It was mainly just a trading range. But we had support down here at $2, and we had resistance up at 250, 230, and we could not break out of it, and we fell down through $2. But we bounced off of a $1.15 or $1.10, whatever it was, and now we've been in an uptrend ever since. Got some nice big green candles the last 2 days, today included, and with these two small resistances between us and our next fib level. This will be where I'm looking to take some profits because I actually trust the fib level more than I trust these other ones. Fib does a very good job of predicting levels before you actually see them. If I was to mark this out, note if I drew this look at how this fib lines up with the actual squeeze. So if I had set the bottom and say we were right here, we peaked here, and I was trading down in this range, if I had set my fib level just like this and I caught this bottom, then my resistances would be right on the money with where that candle opened up at, and then it got slammed back down from there. So that actually was a really accurate call out by the fib. I'll put that back where that was. I'm telling you, man, fibs tell the future. Okay. So there's my fib extension. I'm setting that price at about 235, 240 is what we'll say that resistance is at. And the next level above that is 315. I really do like it. Really do. I don't know if y'all have used TradingView before and you see this before, but like this squeeze momentum indicator, super nice. I really like it. It's very similar to the MACD, but it's based on volume as well as it accounts for trading volume as well as price action. So there's diminishing returns when the volume drops out. So even as the price has to continue falling at insane levels when there's less volume, as compared to here where there was massive volume here and the price was shooting up constantly. Like this thing was pretty accurate when it comes to predicting the big moves. Like this weakness here, this should have been, if I had been using TradingView at the time, this would have been my signal to get out of my PROG position and start going short a little bit. I would have gone short with covered calls and buying puts with collar strategy. And the reason I do that is because I want to make money off of the premium. So I sell the calls and then let the price just bleed off. And because I know it's manipulated and there's really nothing I can do about that except, to warn retail. I didn't warn anybody because I didn't know that was going to happen. And I didn't make that trade. I'm just letting everybody know, like, ideally what I would have done in a perfect world if I had been able to see things. But I held on a little bit too long, and I finally sold out of some of those calls when it was back down at $4, which is a little disappointing. And at that point, the volatility was against me, so selling calls didn't make sense anymore. And I just held on, waiting for the dip to stop dipping, and it just didn't. So that was kind of the mentality that I had at that time. But in any case, a squeeze momentum indicator with this big meteoric rise, huge. This was this was by far the best indicator that I've seen, letting me know when my entry and exits should have been. So, yep, I gotta say, I'm really impressed with how accurate this thing was. It's really, really dope indicator. All right. RSI on PROG is starting to approach the overbought territory. So unless we keep on ripping, it's staying cool. So it's got room to go. We got a little bit of room to go. We could do it. Like the RSI has enough room. It's just a matter of will it. Will it, will it, will it? I'll will this thing to $20 if I could. Go ahead and head back to our 4 quadrant. All right, we're back above $7 on BKKT. That's nice. Still got Progenity to let us know when we crack through our resistances. What are these other 2 alerts that I've got here? What is this saying? Oh, that's just BKKT breaking out, and then Progenity also crossing up. Okay, so those are alerts that happened a little bit earlier. Just checking. Can I have a look at the OBV on RCAT? Sure, we can take a look at RCAT. Go back to... Oh, you know what? I want to set an alert on this, actually. Let me go ahead and set an alert on this before I get too ahead of myself here. I want to make sure that I get out of my Uber calls at a good price. I don't want to miss this one. Okay. Very good. I wish that TradingView lets you adjust your chart elements really easily with just the arrow keys, but it doesn't let you do that with the alerts. I wish it did. That would be really nice, just in case I make a mistake and I notice, oh, I just need to move that a couple cents. That would be really nice, honestly. All right. Well, let me see. Uber. I have faith in you. I believe. I believe in the power of taxis and share riding. Show me what you got. There's Progenity. Let's take Fun out of here. Fun's not doing anything. Let's check out RCAT. Red Cat Holdings. Don't know. Did I look at this one before? I must have looked at this before. I wouldn't have these indicators on here. Oh, I was comparing it to Mara. Okay. Well, what is it doing? BKKT, BTC's going, Mara's going, RCAT's going. Great. Makes this easy. It's basically going to do whatever Mara's doing. That actually makes things pretty easy. Let's go take a look at some of these technical indicators. Okay, we had a breakout here, and then it went into consolidation. Let's see. Well, it looks like a falling wedge. It looks like a falling wedge, and it looks like it broke out. So this is definitely good. Entry would have been here. I don't know what this price is. This price would have been at 175. So this was the time to get in 170, 175 when it broke this falling wedge. RSI is still nice and middling. So since we're middle of the road, still a good opportunity for entry. Your max risk right now would be you'd be risking about, so it's trading at right now $2. You'd be risking 40 cents. So you would set your risk at $1.60, and if it breaks below that, like just get out the trade, because then that would just mean that there's more bearishness ahead of it. But I don't think that that's going to happen, just because I see what BTC is doing, I see what Mara's doing, BKKT is doing. It looks like it's the same play. I don't know what this company does, but if they're a holdings company, I'm going to assume that since they're moving with crypto, they're probably in crypto. Feel free to let me know if I'm off base on that, or if you want to just drop some DD. I'm watching the questions. You can go ahead and let me know. But with this one, I like it to what's this price? It's 230. That's a really nice resistance right there. So I would see how it reacts to 230, and see what happens after that. If it cracks through that resistance and you start seeing some crazy good volume, right now you've got a lot of indicators on your side. The MACD crossed. Let's also look at EMA. Your 9 EMA is getting ready to make a cross on, which one is this one? So the 20 is getting ready to cross the 50, so that's a bullish sign. And if your 20 crosses the 100, that's even better. So if the price starts approaching, um, if the price starts approaching or exceeding, I need to get these comparisons out of the way because they're messing with the price chart. Okay. So if you start approaching 250, then you're going to see a cross of the 9-day, or I'm sorry, this is the 20-day extended moving average will cross with this, with the 100-day moving average. That's a golden cross. And that would be a huge bullish signal. Even better if we start to see some squeeze momentum out of this. I don't know anything about what their squeeze prospects look like, but if you're looking for a big move in this one, there's potential upside here, all the way to 350, and beyond that. I mean, I don't know. Clearly, it's made huge moves before, so see what happens, man. And good luck to you. I like the chart, the falling wedges. I love playing these because they make for a really good reversal. And I like looking for things like the three white soldiers pattern. This is two. This is an example. A three white soldiers pattern is when you get a candle with a long body and only a tiny wick or no wick at the top. That would be a soldier candle. Um, and if you get three of those in a row, that's like a clear sign of bullishness. You could probably actually look at this on a weekly time frame, and I bet you. Oh my goodness, what the heck did the chart just do? I went to the weekly and it imploded. I went to my weekly chart and RCAT imploded on itself. What the heck did this chart just do? Yeah, yeah, perfect example. So here's a soldier candle on the weekly. If you get another big long body candle on the weekly, then that would be 2. And then if you get 3, then, well, there's your reversal. This is on a weekly time frame, so you're probably not going to get that, but you look for that you can look at it on any time frame. But the popular one is like the daily or the 4-hour. A 4-hour would probably show you, like, if you get these candles in a row, that's a 3 white soldier pattern. This is actually, I'm trying to remember. Kat, do you remember what this pattern is? This is a bullish pattern also. Trying to remember the name of this one. I know I've seen this pattern before. Somebody feel free to shout it out in chat if you recognize what that pattern is, because I'm an idiot who doesn't read trading books. Try says that RCAT's in drones. They have a government contract for mil-spec drones for border control. Oh, that sounds terrifying. Like, I don't want to get involved. But I can't argue that the chart looks good. It looks like the bearishness is pretty much all but over for them. If this reversal carries through, I think you would want to see it break through this $2 resistance here for you to get confirmation. So if you're still waiting to get in the trade, wait for that $2 confirmation, break through it, and continue to make a move up to 230. It's an opportunity for a good scalp trade. If you're looking for a long play and you want to like see a squeeze out of this thing, I would play at the very least. I would go. Um, if you're playing options, or if you're just buying shares, then great. Buy the shares, hold the shares, do whatever you want with them. But options, if you're doing calls, I would probably go at least out to June or September. But I'd probably be playing leaps if you know about this stock and you have conviction in them. Let's go see what PROG's doing. Still fighting that $2 resistance. It seems like it's having a bit of a struggle there. BCAT's just cracking right through that $7 price level. I love it. I'm expecting the volume to pick up again here before we go into close. That would be awesome. Vinco Ventures, yep. BBIG is starting to make a move back up to 350. I love it. Got a nice cup here. It's actually a double bottom, but looking at it more on a whole level, am I allowed to draw shapes? I am. Let's see. Yee. There we go. I got a cute little purple cup. I love it. It's a little bit of a wonky cup, but it is there. It's most certainly there. Progenity is the real deal, though. Progenity's cup is sexy, man. While we're talking about technical patterns, let's take a look at BKKT because this is a fun one. I love head and shoulders patterns, and I love inverse head and shoulders patterns. They work out so people give them a lot of credit, and for good reason. They tend to work out. I'd say that this pattern works out 80-90% of the time for me. Inverse head and shoulders, they don't really break down, but you got to be careful with manipulated stocks. So, like, I got to put a pin in that and say, here's a caveat. But anyway, so here's your head, here's your shoulders, and here's your neckline. So if you look at this like somebody standing on their head, you got the head here and you got the shoulders here. That's the valleys. Okay. If you flip this over, where the head is at the top, a head and shoulders pattern, that's a bearish signal. And what you're looking for is for there to be a cross. So with the regular head and shoulders pattern, the price is going up and up and up and up, and then it consolidates, goes up again, comes down, consolidates, and then goes straight through the floor. With the inverse head and shoulders pattern, it's exactly the opposite. And it's not a coincidence that the inverse head and shoulders creates a cup and handle pattern. So this right here, cup, handle, and it ended up breaking down. And interestingly enough, you see a smaller inverse head and shoulders right here as well. So isn't that interesting? A little bit of psychology. But anyway, so BKKT was falling through on its price and crossed through this neckline. You wouldn't see the rest of this chart, obviously. So you're just breaking down. The price bounces, hits a top, breaks down through the floor, and then establishes a new lower low. And it'll hang down there for a little while and then break out back above and then go straight for that resistance. And now at this point, you should see the pattern. You should see the shoulder, you should see the head, and you're looking for another shoulder. And this, if you're really paying attention, you can look for this opportunity for you can look at for this bounce and then look for the reversion to occur. This would be about what your entry is, or you would at least start looking for your entry. This is your entry point traditionally. So right here where you see the neckline, right on the neckline is where people create their position and they go long on the stock. And guess what? You would have been right. You can also look at this smaller head and shoulders pattern. You see it's really tiny. We got the head, we got the two shoulders, and the neckline is pretty much the same. See this breakdown here, or the neckline would have actually been right about here. So I'll do this in another color just so that you can see what I mean. Do that in a pretty pink. So why not? So this would have been another smaller head and shoulders pattern if you had seen this breakout as your neckline, then you would have actually been earlier on the play. So little bit of advice on, or sorry, not advice. This is non-financial advice channel. This is just entertainment / stonk education. We don't take ourselves too seriously here. So, right, we got our big inverse head and shoulders now, and now we have on a larger time frame, we have a cup and handle So what we're looking for, we have this clear U. This cup and handle is it's demonstrated itself pretty well. Now we're looking for consolidation, so we'll get a little tail off of here, maybe a little bit of downtrend. So we might see us break down to like $65 or so. If you're looking to take some profits and look for a re-entry opportunity, then this might be that time. You can do what I did, which is I took out like a third of my position. I locked in some profits, made sure that I had set that aside, and I moved that into another play, which is Uber, if you're curious. But I'm still holding on to this position for the most part. And if I make money with that Uber play, great. I'll go ahead and take those profits out. I'll have a little bit of extra powder, and I'll probably wait to see a bounce here before I go and double down on my position. So I'll look for a bounce here at our previous support and see what happens with this particular play. I've still got 10 calls in BKKT, and we'll see what it do. Let's go back to GameStop. GameStop still hanging out at 120. Here's another example of that cup, and then you see the handle. This is exactly what I'm talking about, what I'm looking for in BKKT. Big cup, here's the handle, and then take off. So if you're looking to make a position in GameStop, this is it. This is your breakout point. And you may also notice that there's a, well, it looks, it's a pretty messed up head and shoulders. It's more like a triple bottom, but it's got rising support here. So this is still a bullish signal. There's bullish signals all over this. You can look at it as an inverse head and shoulders. You can look at it as one big cup and handle. You can see this intraday cup and handle. You can see a rising support or a rising wedge after a long downtrend. And if you go even further out on this time frame, you could probably draw out a falling wedge on this one too. So, yep. Draw this out for all the GameStop memers. You know, I kind of like that. I kind of like that little pink chart now. There we go. So here's a perfect example of a falling wedge. We had the breakout right here. So this is the buy signal. So if you're looking to make an entry on GameStop, this would be it. Resistance is going to be, first resistance will be at 135 to 138 area. And the next resistance after that will be 160, or you can set yourself a fib timeline. Go ahead, Kat, what you got? You know what? You're right. I did say that I was going to take a break a while ago. Everybody wants me to jump into new tickers. I'm like, sure, why not? Yeah, let's do it. I'm having too much fun with this.
No, I was just saying in the case that if you do work now, you can come back for power hour, and then otherwise you can't. Then I would say maybe obviously
that's probably a good call. I will hand things over to Kat and let him take control of the stream. Y'all are going to be in great hands. So, Kat, if you want to go ahead and set your stream up, I'll hand things back over to you.
Gotcha.
And thanks once again, guys, for tuning in just to watch us do a little bit of technical analysis as we go through our trading day. It's been a fantastic day. I myself am up 50% on my portfolio this week. It's been a really, really good day. and most of those moves happened just in the last 2 days. So, man,
How is that PayPal treating you?
Oh, PayPal, that's right. Oh man, we got to cover PayPal. I'll leave that one in your hands, Kat. I'm gonna go ahead and take a break, get myself some coffee, and get to work. But I'll leave you with PayPal and the rest of our plays. Take it easy, guys. I'll see you in a little while.
Yep. Actually, that was you, Veride, that just brought up PayPal, right?
Yeah, but I'm not on my PC, so I can't show anything really. I'm on mobile.
Oh, okay, gotcha. Well, feel
There's,
free to go over some of your DD
there's
vocally if
just
you
that
wish.
massive print of unusual whales. Let me see if I can send a chart. Just those massive plays on
Whoa, I'm
unusual.
sorry to cut you off. BKKT is really ripping right now. It's pushing almost 750. Sorry to cut you off.
That's right.
And go ahead and continue.
Yeah, I think I was looking at PayPal earlier, and looks like it's coming after the long wedge ever since they dipped on earnings. So there is a pretty massive gap fill up to like 150, and next to resistance, I would say it's very, very far at like 130. Let me see if I can send this through.
Okay, that is a big old gap right there. Wow.
Yeah, I'm looking at it on the 4 hours or the 1 hour. And looks like it's breaking out of the wedge. I'm excluding the first candle.
Yeah, I mean, that is a really solid turnaround there. And the RSI looks like it wants to pop and
Yeah,
crossover as
so
well.
I really like that the on the daily you had that doji candle that usually they signal a reversal. So let's see if that holds. And together with that massive print on unusual whales last night, I am basically 50% up on some calls.
Nice, 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 nice. Yeah, those are some pretty big prints yesterday. Oh, we got some green coming in. We got here. And BKKT is looking interesting. That was a big volume pop right there. I like PayPal quite a bit. And for anyone who is curious what we're talking about as far as the unusual whales prints, if you go to Hell's Basement, there's some clips from that from yesterday when we were going through and talking about what we were seeing.
I posted in the live stream chart
Nice.
a chart that I have.
Ooh, nice. Ooh, yeah, it's trying to push that moving average too. I like that. I'll pull it up.
Yeah, that's the 50 moving average on the hour. If you look on the pre-market and after hours as well. Because otherwise, that moving average, if you look at just regular trading hours, it crossed the 20 moving average, held it as support, and the 50 moving average is at 134.
Yeah, that does look like it has some strength, and even just from that candle the other day when it had that massive rundown, it looks like it could possibly match it if it got some strength.
Yeah, and yesterday you actually had like at the very bottom, what probably made that doji had like a big bullish engulfing candle on the hour. And I think that's when we actually, TD and I actually opened our positions on that big last 1 hour candle from yesterday.
Nice, nice. Yeah, I think.
I'll be back in a couple of minutes.
Yeah, I was gonna say, I think what I'll probably do is for people in the YouTube chat here, just because we're kind of having a slow moment, I might put everything on mute for a bit. I'll leave the charts up and I'll leave the stream running. But I'm just gonna kind of give everyone a chance to, take headphones out and, maybe get up and walk around and stretch and all that good stuff. But we'll be back, I would say probably in the next 20, 30 minutes, maybe something like that.
May I ask who is the special guest?
Jackson Hunter.
Don't.
May I ask who is this?
Jackson Hunter.
Very nice.
Yeah. All right, and for everyone who is hanging out in YouTube chat, looks like we got some people coming in. We are back live now with the Discord. Just took a short intermission. Currently, we're just waiting on TD to get back and all that good stuff, but it looks like we actually have a special guest coming for Power Hour, so it's going to be an interesting one. But you guys in Discord, feel free to go back to what you were talking about PayPal and all that good jazz.
Yeah, so today on PayPal, don't really have much big trades above $1 million. You have one 185 put that came through. But then you also have someone selling a 230 put. So the 230 put is 37 days expiry. The 185 put is 9 days expiry. So I wonder. Okay.
Were those today trades, Verde?
I think the 230 put was, it lines up way too nicely with the earnings and the price around that, because the price there was like 232. And I think they just took their time with that trade. That's just my opinion over the trade, because it was bought out for March. Let's see. When was the earnings? Earnings was on 9th. No, sorry. Oh yeah. I'm talking about the first gap back in November.
Oh, okay.
Yeah, sure. So just looking.
Go ahead, Verde. My bad.
I wonder if that put came. So I'm talking about this trade here at the top.
Okay, so on. So
If you're listening, I just picked up some BBBY February 25th. I know we're talking about I just have to extend it a little bit because it looks a little strong.
It looks real good, bro.
You're good, brother.
So did you did have a little bit of OI decrease on that? Is that what I saw up top?
Yeah.
A little bit, not much, nothing significant.
You had some on last week that was quite hefty, I would say.
We're catching a meme bid.
Yes, we are. Everything's turning
Yes,
up.
we are. A meme bid coming through.
Yeah, so basically my thoughts on this trade, someone closing a 230 put.
Yeah,
Because
Joe
I can't.
Miami, TD will be here shortly. He's taking a break. We're some of his mods and analysts from the Discord. So we're just, going through some DD with some other stocks or whatever until TD gets back. But yeah, I know none of us sound like TD. He's got a sexy voice.
Kind of true.
He's got that bedtime story voice.
Yeah.
Boo. I've been listening.
Ah,
There he is.
I'm just listening in for right now. You guys keep on going. I'm having some lunch at the moment, and I'm excited to say that we'll have something special for everybody in the stream. So, if everybody wants to go ahead and get some hype going, let's get some likes going in the chat. We're gonna have a special guest on the channel here at the top of the hour for Power Hour.
Sweet. Definitely looking forward to that. Enjoy your lunch, brother.
Yeah.
Provecho.
Exciting.
For those of you on YouTube, if you could see anything on the screen, and if you could hear us, if you could put a thumbs up in the chat, I would really appreciate that.
the volume profile looks very interesting on PayPal.
Yeah, I took some of BKKT the other day, and I bought into PayPal. I picked up that 128 for the 18th. It's up 49%.
Yeah, just looking at the daily, I quite like these two dojis. So you have one almost perfect doji, and then a what you call a dragonfly. You had another dragonfly that failed to hold and give a reversal, but I think that was too premature. On the 1 hour, I think looks a bit better in terms of wedges and stuff like this. And I know we're in a doubt trend overall. I'm trying to think what this could be based on yesterday's flow.
Post Mass Tony, I appreciate it. Fabio, we got David Sweet, Mike Ryan, Cozy, Porch Joe Miami, IQ 271, Wolfman. Hey, I appreciate y'all giving us the feedback on that. I would definitely want to make sure the audio is coming through loud and clear. As far as the video, appreciate that, brothers.
Yeah, it's interesting. The overall options chain activity on PayPal is really just, it shows more calls than puts today, but the big trades are all on the put side, and I'm seeing a lot of calls today specifically. I don't know if that's something that you're identifying into this trade, but it seems like they're hitting a lot of the 200s for January of 23.
What really got our attention onto it, if you're looking at my screen, was if you look at last night, and I know this is in GMT, so basically 20 hours of 21 will be 9 p.m., which is market close in the US. But pretty much last 2-3 hours, a lot of buyers came in with like up to 27 million. Well, a lot of bulls rather than buyers, because they sell puts. Which is pretty unusual, I would say, to sell puts. A lot of them were size greater than OI, 125 calls, but these are like very high premiums. Like you have a 27.8 million, 27.8, 10 million, 5 million, just 20 minutes before bell.
Yeah, those premiums are outrageous. That someone's parking a lot of money there.
Yeah, so I wonder if someone is maybe trying to, I don't know, accumulate or something like this. 170 puts. Yeah, these were just, the volume was pretty high, but actually the OI decreased since yesterday. on this big trade. It was nearly 20 million. The thing is, what really annoys me is that I can't find this one. This trade that came through today. And what makes me wonder is because of the strike, looking on the chart, the 230 is actually the first gap down at the earnings back in November. But yeah, I don't know.
Yeah, I'm trying to play it up there too.
Might be just a coincidence. But then it would be a hell good of a coincidence if that person with that amount of money got extremely lucky and they just banked a lot of money. What I wanted to ask you, Occams, if you were listening when I was going over my theories of GitLab and what it could happen.
Mm-hmm.
Because were you listening?
Yeah, I wasn't mic'd up at the time, but yeah, I was trying to get in on that conversation about your reverse head and shoulders.
Because I see
Reverse.
you posted that chart. So yeah, I'm bloody hell. Yeah, this could be like, I do see this, and I wonder, since you're at the neckline, you're found the 50 moving average, the resistance. Are we just gonna retrace to like some of these levels down here, or is this the big formation and the big head? The reason why I think this is actually the shoulder is because of the duration of it. I find generally that the shoulders tend to be as long as the head. Does that make sense?
Yeah. Yeah, yeah.
Um,
So you're looking at the 1 day. I think I was looking just at the 1 hour, kind of looking back to pretty much the beginning. Yeah, right at the beginning of the year. And so you got a little bit of a inverse head and shoulders. It's really messy, but you can kind of make it out right there between what would be your left shoulder would be January 10th, the right shoulder would be February 3rd, and your head would be 24th of January.
Right.
Mm-hmm.
Yeah.
Yep.
I can only remember where the pattern is to actually plot
You're
it.
going to want to go to, I think it was in there. It was in there.
There you go. So it would have something like that. Would you say?
Yeah. I mean, like I said, it's messy, so you can kind of pick a couple different points there, but it just had that little bit of a dropout on the head, which would have been nice to kind of find some kind of support, sending support from the head up to the start of the right shoulder. But
yeah,
TAs, there's a little bit of give and take. It's not perfect.
only one big FTD day with like this one back on 13th of December.
13th of December, so
if you look at it, 13th of December, was it 13th? Yeah, Monday 13th.
Nothing's coming through on YouTube. I don't know if y'all know that or not.
yeah,
Yeah,
Cat's got it muted right now.
yeah, Cat's doing something over there.
Okay.
So on 13th of December, your entire volume was a million shares, out of which you had 570,000 failures to deliver. So something is really stinky in here, in my opinion.
Interesting.
That's more of the daily volume, more than half of the daily volume.
If you run a volume profile all the way back to December 13th on the 1 hour chart to a current, your shelf is exactly at the open that day.
And I lost it again. Fixed range. November 13th. Ha!
You got it on December 3rd. Yeah, okay.
Yeah, isn't that what you said? Like this one here?
How does yours look? You have yours set to the 13th all the way to current. Why does your volume profile look different than mine? Yeah, mine's showing density up at hold on, let me see what this is. $74 or $75.
Yeah.
Yours is showing it down in the 40s.
Oh, the big one. This one.
Yeah, that density line. But I'm curious. Maybe I have. Hold on.
Are you on log or something? That shouldn't make a difference.
Hold on. I'm sorry. I got to go mic off for a minute.
No worries.
Gotcha. And actually, it's perfect because to you guys in YouTube chat, we're apparently still having tiny little issues here, so we're just gonna go black for just a minute or two before power hour to try and get this fixed. Okay, so just 1 second.
Hey everybody, this is True Demon, the Devil's Stockbroker, and I'm here with a special guest, Jackson Hunter, one of the main covers of AMC and GME due diligence. Hey Jackson, welcome to the stream.
What's up, Demon? Thank you so much for having me, man.
Yeah, appreciate you coming on. So I've been talking about AMC and stuff all day long, but I've been living in an echo chamber with me and my analysts. Tell me what your thoughts are on AMC and what you've been viewing and why you came on stream to talk to us today.
For sure. Well, I came on because you posted this beautiful thread of due diligence that I read last night, and everything made sense, and there was TA involved, and there was your own research involved, and your own like proprietary short exempt squeeze signal theory involved, and everything checked out to me. And like, as much as I don't focus on TA as much on AMC and GME, just because, and I was just thinking about it before I hopped on. It's like, it's just, I've been covering this stock for such a long time, and I used to like be way more focused on technical analysis, but after watching the stock's movement, and you can probably agree, some days it just does whatever it wants, and it doesn't really care about technical analysis. But as I'm pulling up the GME chart right now, you can see it's obviously trying to break out of this downtrend that it's been in since November 23rd when it was at 250 bucks. And it's obviously trying to break out of that. It's got the MACD momentum. AMC, at least, it did the moving average crossover with the 13-day moving over the 48-day, which is something that Review Dork has been talking about a lot lately. And it just did that on the 4-hour. So this does look like, I mean, it could be an inverse head and shoulders. You can call it whatever you want, really, but it does look like it's primed for a reversal. And just outside of that, AMC is not a $18 stock. Even fundamentally speaking, like outside of a squeeze, it's, in my eyes, it's at least $30, $40 with everything that it's doing, especially with the debt restructuring that it just did recently. But yeah, man, I'm just here for the ride and waiting until my number's called. I'm not trying to make it too complicated.
Yeah, as we say pretty frequently here, patience is key. I feel like retail is on the whole like been extremely excited and eager for a squeeze to happen, but just like many good things in life, you just can't rush it, and they all happen in their own due time. All you can do is do your research and try to get ahead of these trades before everybody else is wise to it, and you make your entry as soon as you possibly can. And I feel like that's healthy for the markets if everybody is on the same level when it comes to spotting this stuff. What you said about the inverse head and shoulders, I definitely see it. Like this break here, and then I can see the beginning of what looks like a neck and the shoulders and a very deep head. So that sounded a little dirty. Sorry about that. So if we were to see this play out, what we would be looking for is for this reversion to hit around 160, 165 or so, and then make a bounce off of get rejected off of that resistance, and then come back down to between 135, 140, and then look for a bounce there. If we got confirmation, then we would see 160, 170 again, and then a breakout. And if the full head and shoulders pattern played out, then GameStop would be going well past this previous high. So that's we've been talking about inverse head and shoulders and head and shoulder patterns, cup and handles, a lot of different technical patterns that we watch for, and they've as you said, like a lot of these stocks, particularly AMC, GME, will kind of do whatever they want, and I feel like there's a very good reason for that. Mainly being that it's traded heavily with algorithms, and that's part of what led me to my theory of the short exempt squeeze signal theory. So did you want to hear more about that theory before we got into the timeline of the AMC charts and the GameStop charts and why the OBV is important, or would you like to hear the short exempt theory first?
Let's hear the short exempt theory, man.
All right. So I'll first go over and explain what short exempts are. So I'll back up a little bit further than that, actually. So one of the main theories that everybody was like so excited about early on in like the GameStop AMC saga was FTDs and trying to figure out like when is the FTDs going to spike because the price is going to go parabolic when it does. And although that was correct, like all the reporting in on FTDs is so delayed because it's on like a half monthly basis. So you don't get the information until the price is already played to the next level that it's going to. So it was kind of useless because you're looking back in history and you want to be looking ahead. So I dug through the reg show filings that were issued by the SEC from 2005 through 2008, and then a revision in 2010 on reg show or regulation short. And what this regulation covers is what hedge funds, market makers, and brokerages are allowed and not allowed to do for shorting. And that's where things like the short sale restriction rule and short exempts come from. So, what is a short exempt? A short exempt is a tool used by market makers only. It's exclusively available to market makers during, quote, bona fide market making activity. That means that when they're making the market makers have to be able to borrow and short stocks in order to fulfill buy orders. And that's normal activity. That's healthy because what they're doing is they are providing liquidity to the market. They are taking a short by borrowing a stock from somebody else and they're selling it to somebody who has requested a buy. And then they go out into the market and then try to go and find a buyer or rather a seller at a better price and then cover that short as quickly as possible. And in real time, the way that should work is it should be like that whole transaction should be completed and that short would be closed within a few minutes to a couple of hours and it would settle by the end of the day. In practice, that's not how it really works. Often market makers will delay delivering on these shorts because if they see the stock moving in a direction, then they will actively try to make profit off of that by holding on to that short position and collect more capital by obviously trading on the bid and the ask spread. And that's how they make most of their money is by trading that difference between the bid and the ask. With a short exempt, it gets even more interesting because a short exempt is a short that is exempt from the regulation show rules. That means that the short can be taken even during a downtick when the SSR rule is in effect. So if a stock is sold off by more than 10% and it goes on the SSR list, the way it's supposed to work is it's supposed to prevent a dogpiling effect where everybody just keeps shorting and shorting and shorting it. So they're only allowed to short during an uptick when the stock is heading up. But a market maker can exempt themselves according to what they claim are bona fide market making activities and, quote, necessary to maintain healthy balance in the markets. So their excuse is that we need to be able to make the market and we have to short even during downticks, even when SSR is in effect, if we have buyers. So our purpose is to fulfill buy orders. We don't care about direction. At least that's the argument the market maker will make. But if they take this short exempt, then they can do so and continuously push the price down in effect by fulfilling these buy orders and taking a borrow and shorting during downticks. They can continuously they can add to the pressure that's pushing down on the stock and continuously force it to fall further. Even if they are doing bona fide market making activity, this can be the net effect. But it gets even worse because short exempts are also exempt from the locate requirement, which means that they do not have to locate a borrower right away, or they do not have to locate a lender. Excuse me. that means that they can take a short without borrowing the stock. And that sounds a lot like naked shorting, doesn't it? So the beautiful thing about short exempts is that they're reported every single day. These have to be marked by FINRA, and these numbers have to be disclosed at the end of each trading day. So when I was digging through the Reg Show filings and I found this, I saw, okay, this is a device that's only available to market makers. They only use it to take the other side of buy orders, and they can only do it if there is a quote exception. And I looked at many stocks when I was considering what short exempt should, what was considered a normal amount of short exempts. And the answer is there should be almost none. Short exempts, by definition, are exemptions that should be taken in rare cases. So when I looked at AMC, GameStop, BB, Senseonics, BBIG, I could go on for a while, Mavis, MVIS. Like I said, I can go on forever. The short exempts would exceed tens to hundreds of thousands of short exempts, when even on a highly volatile stock, short exempts would never usually exceed 1,000 in a day, even on extremely high float, very big cap stocks. Short exempts, by definition, should not happen very often. So when I saw AMC like shattering records for short exempts, it was very telling. So back in this period when AMC was trading its the January squeeze, short exempts on this one it was like 10 to 12% of the total short volume, which is absurd. Like short exempts should never exceed 0.1 to 0.5% of the total short volume that's occurring in the market. And for there to be that many short exempts, there had to be immense volatility in the markets. So what I came up with was this theory that if short exempts are being used as a tool to manipulate the stock price and keep control of the stock, then how can we use that to predict when there's going to be a massive amount of failures to deliver? And that's what the key was. Short exempts, only if they have not been located, only have 6 trading days after the day they were created to close the trade, or they will fail to deliver. And if a market maker fails to deliver on a stock for more than, I believe it's 6 consecutive, sorry, let me correct myself. A short exempt becomes a failure to deliver, which must be covered within 6 trading days. If a short exempt has not been located and after the trade settles, there is no share delivered to the buyer, then the market maker is in failure to deliver status. The market maker only has 6 days to cover that failure to deliver. And if they create enough violations, then they'll be fined, they'll be restricted from trading the stock, which significantly cuts into their profits, and they'll be penalized. So the market maker is incentivized to cover those failures to deliver within that 6-day window. Now that's out of the way, how can you figure out what short exempts are doing and how that helps? So that's part of where my that was part of figuring out what the magic number was, so to speak. See if I can go ahead and go get my Twitter thread up here, because I got some pretty pictures that will kind of describe what it is that we're looking at, or at least the right numbers.
Definitely. By the way, I just got to say I'm not a financial advisor. This is not financial advice. Please do not make investments based on what I say in my content. But no, you're spot on, man. Like, this whole thing is based on nobody's locating shares before they're selling them. And if they were, then you wouldn't have the stock going from $77 all the way to $13.40, when in reality, for the most part, retail is just holding or buying more. So, like, I learned a lot from watching Patrick Burns videos and researching him, and the guy broke it down so simply, man. It's all about share locate, and nobody, in my opinion, is doing that on AMC and GME. The stock market is an honor system amongst thieves, and you know what they say about thieves. Like
Yeah.
they don't care at all, man. All they care about is money. All they care about is money, and the quicker people realize that, the quicker like it's a lot easier to accept the corruption and manipulation that's going on. They don't care about anything but money, and maybe it's more advantageous for them to go long at this point, and so maybe we'll see really green price movement because the shorts and hedge funds, institutions, family offices, whoever you want to call them, the counterparties, the people that are going against the apes, they know that we are staying here and we're not leaving. They've known that for a long time. I'd argue since at least April or May of last year, they saw how big the global movement was. It was unlike anything ever, dude, in history. It was unlike anything, like there's like Tesla fanboys of that stock and stuff like that. This makes that look like an ant, man. Like
Yeah.
we're 10 million plus worldwide, and we just buy and sell. Some people are selling their houses. Like if I had a house, I'd probably do the same thing, but I don't. But it's just like um, nobody's locating anything. They're just going, "Oh, you want 100 shares? All right, here you go." And they're not actually checking it. And when I say they, I'm talking about the computer, because the computer is doing all the trading. It's not an actual person on the other end of TD Ameritrade. It's a computer, and it's skipping the part where it's supposed to locate a share. Like that's just how the stock market is. They say that it works, but like you're saying, in all reality, it doesn't work like that.
Yeah.
If it's advantageous to the market makers or the hedge funds, the big money, then they're gonna do it, and they don't care if it's against the rules, because there's gonna be some loophole written in Rule 1267 that allows them to do that. They're like there's thousands of loopholes written into the stock market, and there's a reason for it. It's so that on a rainy day they can pull that out of their pocket and screw retail. And this is not, it's so funny, man, because like people say we're conspiracy theorists. Like if you were in the stock market for any measurable amount of time, you would understand how rigged the entire market is. And it's not just these two stocks. If you read a book by Michael Lewis, if you listen to Michael Lewis speak for 1 minute, who by the way was a bond salesman at Salomon Brothers in the 80s, so he knows what he's talking about, and he researched with Brent Katsuyama, who started.
Oh, did we lose Jackson?
Yeah, I think so. It's the hedgies are coming for us. Look at AMC
Oh
and GM.
man.
The hedgies are coming for us.
They're coming
He
for
did,
us.
he did say Michael Lewis, a very well-known author regarding the Big Short and a lot of different books.
Yeah, AMC's and GME are catching a bid. Y'all scared the crap out of them.
Oh
So is
man. Oh
BKKT.
man. We've only got like 83 people watching right now, actually. It's tell you what, Jackson, we'll hold the spot here in the stream for you if you want to close your Discord and restart it. That usually works if you can still hear me.
Okay.
Oh, there
good
you are. I
now,
hear you.
right?
Yeah, I can hear you.
I accidentally ripped the headphone out of my laptop. That's what happened. But
It sounded
yeah,
a little
man.
abrupt.
Like people that have any experience whatsoever in the stock market know that it's rigged. Only people that don't think so are like people that don't have experience in it, or they just listen to mainstream media. But I'm telling you, dude, like if you don't know what I'm talking about, just Google Michael Lewis, Google Patrick Byrne, Google CMKM, the diamonds company that had 2.5 trillion extra shares, not billion, trillion. That's a billion times 1,000. So people that say like that 2, 3, 4, 5 billion shares on AMC is far fetched. It's really not. It's actually run of the mill. It's actually normal for the stock market. So,
Yeah.
and what I'm saying is not anything new, man. This is, and that's my entire point. This type of stuff has been going on for a long time. The only thing that happened in January of last year is that the apes exposed it because we had such a gigantic internet trend. See, that was what kicked off this entire thing. It was a trend on the internet, and the internet remains undefeated, man. Like if something gets trending, it does not stop. Like look at the Joe Rogan thing. Like I don't care if you're in agreement or disagreement. Look how big that thing got, and it's like a snowball that just gets bigger. Eventually, that's gonna go away, especially because you can't really cancel people like Joe Rogan. But it's the same thing that happened with this stock. Like it got popular and it only got more and more and more popular because not only did people see it as a way to make money, but they saw it as a way to expose the powers that be, whatever you want to name them as, that were financially oppressing the lower class for decades. And if you want to get real, actually thousands of years. And that's why I'm super I believe in this thing more than anything I've ever believed in, man. And that's why I like the work that you do, Demon.
I appreciate that, dude, and I definitely feel you. The manipulation is it's extremely blatant. It's been in our faces ever since computerized trading was put in place. But I mean, the world's never worked any differently. It's always the wealthy and the aristocracy in control of the proletariat. That's never changed. Even in the French Revolution, that still didn't change. So, like, history will make fools of all of us, and it will have the last say. But for the first time in my life, I feel like I'm actually doing something important that will make a difference for future generations, because right now I see the manipulation that's happening in the market, and I feel like it's reflected across all of society. Just the way that we conduct ourselves as human beings in the world, and especially in American society. We we have really given in to the powers that be that control our decisions, that we've given into like domestic consumerism and things of that nature, allowing corporations to create the rule of law under the guise of a government that is apathetic and completely ambivalent to the struggle of average individuals. Now, I don't think there's a single, well, maybe there's probably, I could count them on one hand, but there's very few members of Congress that actually care about people that are below the median income level. And when I say median income, I mean people making less than $35,000, because that's the median income. The average income is so skewed by the 1% that the average income in America is something like 60,000 or like 58,000 a year. But the median, where most people are, 50% are below $35,000 a year. That puts most Americans making minimum wage. It's really disgusting. And we've never had such an imbalance.
No, it's
And
insane.
yeah, so I could go on forever about this.
I would
It
love to.
infuriates me to no end, because I was there in 2008. I actually had just joined the U.S. Army in 2008, and I had to give almost my entire sign-on bonus check to save my parents from losing their home, and it
Wow.
was. I was able to buy myself a used car when I got out of basic training, and I gave my parents the rest of the money to get out of their to get out of some really serious shit with their bank, to save their mortgage. They had to take out a second mortgage on the house, and they were about to lose it. And it was a
Thank
house
you
I
for
grew
your
up.
service, man.
Oh, no problem. I'm not there anymore. I separated in 2015, but the but you know it did teach me things. It taught me things about discipline, which I'm extremely grateful for. But it also taught me something about about the apathy of government and how the structure will fit you into place, and it
Hmm.
will force you into a shape that it finds acceptable, or you
Yeah.
will be rubbed out. And
Yeah.
there's like, whether it's the army, just domestic, civil government, whatever, it doesn't really matter. That applies to all things, um, and that's why I find that's why I get so angry and frustrated and ranty about stuff like talking about 2008, because looking back in history, I had no idea what was going on at the time. But looking back now as an adult that is able to read the numbers and see what actually happened, understand the laws, I'm furious that nothing came of it. One guy went to jail that wasn't even involved. And it was because the guy was so blatant and obvious in his stupidity of fraud that he made it impossible for anybody to not force him to take the fall. Otherwise, it would have been just too obvious. The guy had to go to jail.
Yeah.
Otherwise, it would just blow the entire system up. And we bailed the guys out anyway, and they threw a champagne party all over Wall Street the entire time. It's just, but I'm gonna stop. I'm gonna stop here and get into the rest of the short exempt theory.
Sorry if I sidetracked you, man.
No, it's okay. Like, everybody loves when I go into a rant because it doesn't happen too often. But the tirades,
Rant.
that's what everybody tells me. All right. But we got math.
The stocks
to do.
are looking good though. Just as a
The
side
stocks
note.
are looking good. I want to get
Holding
back
up.
to the charts, but I want to cover the short exempt theory since you had asked. So
Yeah, for sure.
yeah. So the big one that I took note of was short exempt volume, and seeing massive spikes in the short exempt volume seemed to create a consistent story. Something similar happened in January when AMC made its run and GameStop. The same thing occurred. What was basically going on was the short volume divided by total volume was on the rise. Basically, the bigger this number is, the more of total volume is short, but it also had to be short exempts. And what I had noticed was that there was a sharp increase heading towards or exceeding 3%. A short exempt ratio is the number of short exempt volume divided by the short volume for the day. And that's what this number is a percentile of that. So as the short exempt ratio rose to 3% or exceeded it, it created extreme pressure on market makers to cover those shorts if the price was rising against them. And if you look over here, this is the 5-day simple moving average and the 5-day simple moving average rate of change, or the delta rate. This is what put the pressure on them. So my theory has been, in order for short exempts to get out of control, you need to have 95% utilization of the stock or more. And that has to be true throughout the duration. If you lose utilization, then you lose market makers no longer need short exempts to fulfill buy orders. They can just go borrow the stock from somewhere. And they can also cover their FTDs with borrowed stock too, which is that's another mess entirely, but just trying to stay on track. So if you have a situation where the stock is fully utilized and the short exempts are skyrocketing, along with the amount of short volume overall, and the price is rising by a consistent gain of 5% per day, if it's 5% per day and for 3 days or more, that's basically my signal. So it's 3 parts: utilization greater than 95%, short exempt ratio is greater than 3% on average for multiple consecutive days, at least 3 consecutive days, and the simple moving average is climbing at a rate of 5% per day, or is greater than 15% on a single day.
Okay. And how did you must have done a lot of work to figure this out, because this is like this is like a math equation. So you probably came up with this over a matter of months, right? Like how did you, because I think was the first stock that you found this worked on, was it PROG?
The first one that I did this on was AMC, where it worked out. But I hadn't worked out the math at the time. I actually predicted the AMC squeeze. It was May 25th when I called it out. I said it's going to squeeze within, I said 2 to 4 trading weeks.
Oh wow.
And I was like, I don't know for certain, but like, there's a huge spike in short exempts and the price is continuing to rise. And in 6 trading days, these guys are going to have to cover these shorts. These short exempts are massive. They have to buy shares, and there's no shares to borrow. They don't have any other way to cover it. They have to buy it. And that's what I had said.
That's when you saw those 4.2, those back-to-back days?
Yeah, I saw the short exempts happening in real time because I was watching this stuff. I'm like, wow, that's a lot of short exempts. And I started doing math formulas right about this time. And it was on the 25th that I had figured it out. and I realized that the delta rate, I didn't actually have this. My developer, who's been helping us out, big shout out to Flabbergank, we call him Booger. He's
Flabbergank, what's good, dude?
yeah, he created this chart. Everything you see here, this was his work. He
Oh,
wrote all the
nice.
code that makes this happen,
Wow.
and the bot. So
I
huge
can
shout
only
out to
read
him.
one word on it, man. I can read short. The other words, I don't even know how to read. I can read open. I can read open as well.
Okay, cool. So
People are
in
like,
any
this guy's
case,
a fucking idiot, man.
no, you're good. Man, you're good. So like as you can see, like this collection of short over total volume is like this is an anomaly, right? The darker the fields get, the more of an anomaly it becomes. And
Yeah.
this was the big one that was the tell, is that the short volume was so high compared to the total volume, like greater than 50% is ridiculous. And that these short exempts took place, and the price kept climbing anyway. That the short moving average, or the simple moving average, continued to climb. And after the price hit $16, or I think it was like 14.50 or so, when like it was before the end of the day, I was like, this is it. This thing's going to squeeze. I bought, I think it was something in the neighborhood of like 90 call contracts for $40. They had just opened up the options contracts for $40 strike. And I was like, I'm buying them all. And I threw $4,000 on it. And then a few days later, it went to $72 for about 5 minutes during a halt. I was a millionaire. And then I promptly watched the rest of it bleed because I thought the squeeze would keep going, and I didn't understand that they were going to continue using short exempts to put pressure on the price and control it.
Oh,
I
I
didn't
thought it was
realize
going
that they
over
could do it.
100.
Yeah, but had I known, had I understood, I would have seen the continued high short exempt ratio, and I would have realized that they were regaining control because the delta rate was dropping drastically. And that would have been my sign to be like, okay, it's time to sell some covered calls, buy some puts, and hold on to my shares for dear life because this thing's coming down. And I didn't realize that at the time, but it live and learn. And you know what? I went back and I tried this again on Senseonics. Senseonics squeezed on the 4th of June, and I just, with the profits I took from AMC going up to like $50, I took some profits out of my calls and I dumped it into Sens, and Sens squeezed 2 days later. And the same
Wow.
formula worked. And then I tried it again with SPRT in August 20th. That was actually another one of my analysts who I had only just met. He tagged me on Reddit and said, "Hey, I saw your thesis on short exempt theory, and I think SPRT is going to squeeze." So I looked at that one, and he pointed that out to me like in the first week of August. I'm like, I think you're right. And then August 20th, these types of numbers showed up, and we're like, holy shit, SPRT is going to go next. And the beauty of SPRT was that the entire float, 110% of the float, was in the money in the call options chain on August
Yeah.
20th. And you may have seen the story, but SPRT went from $10 all the way up to $56 before it cooled off.
Yeah.
So this formula does work. You have to do some interpretation and really wrap your head around the math and understand that for these factors to all be in play requires there to be a trend, because there can be single day spikes like this one, and this may mean nothing. There could be single day spikes like 10 on short exempt ratio, and it may mean nothing. It may just mean that they got control of the stock. And if the stock price falls, then, well, they'll just cover at a discount and they win. But if they keep adding short exempts and they keep piling on, look at what the FTDs did after 6 trading days. So these big short exempts, we have 2 trading days for the trade to settle, and then 1, 2, 3, 4, 5, 6. And look at the FTDs. And you can see this trend repeatedly. When short exempts spike and there's a huge amount of short exempt volume over total volume, there's an FTD spike 6 days later. You go look at every Ortex chart and you compare it to the FINRA data, it will tell you when the short exempts spike, 6 to 8 trading days later, the FTDs spike too. Every single time. And that was when the failures to deliver really got out of control, because it wasn't just the short exempts. They had to cover the call options for naked call options that were taken out on the stock. And they had to cover. They basically lost all the value of the puts that they had bought that were in the money. They bought a ton of in the money puts at like $20, $40 strike, and they were all worthless by the end of this week. And they lost their asses. It was a really incredible thing. But as they often do, market makers got control of it again. So now I've reevaluated everything, and now I have the benefit of our friendly neighborhood booger that's been helping us with the code to make this easy to visualize, and even came up with some of these pretty little charts as well to correlate all the data for us. And this is something that the members of my Discord most of the members of the Discord will have access to this once we finish beta testing everything. But this is what we're trying to build here, and we're trying to, I guess, democratize all of this data and put this out in front of everybody, because this is where the manipulation happens. And if you can spot it at the right time, you can absolutely trade this data. You can see when a squeeze is going to happen. No mistake.
Very cool.
Yeah, so I see we've been going for a while yet. Let's head back to the charts and go check this stuff out. AMC's still looking strong.
AMC's up 12.7. EME is up 7.4. Oh, those are the only two stocks in the market.
I commend your commitment. I still like to play other stuff. We've got quite a few plays going on. But I won't distract your viewership. I know you guys like to stick to your guns, and that's totally cool.
No, man, I'm just playing. I play options on other stocks, and my viewers know that. But I only hold shares in AMC and GME.
There you go. Right on. So
there's just something about options, man. Just like a side note, I don't know. I started in the market with options, and so like I didn't know that they were inherently more risky than shares or anything. I just knew that you could turn a little bit of money into a lot, and so that's why I started with it. And so that's my background. Like I know that more than trading shares and stuff.
Yeah, I understand. I play options on a lot of my side plays as well, just because I like the leverage, and I've gotten a lot better at timing things. GameStop actually just crossed the OBV marker, so I want to talk about this so everybody can get the information out and trade this. But this is a huge change right here. This is what I'm looking for.
All right, did AMC do it too, or not yet?
AMC's not quite there yet. AMC's got some time left to go. I'll go to the I'll go to the daily.
Interesting.
So AMC is it's going so strong, but we need to look at the OBV here. Oh, that was it. That was my alert. Yep. That was it. All right.
Very cool.
Yes. Extremely
history in the
cool.
making.
Okay, so yeah. So I'll describe what's going on with these very quickly. We covered this earlier on. We'll have a separate video in our separate shorts channel. We'll put this one on the main channel. But we have a video that discusses this entire timeline theory that I have going on here. And it all depends on the OBV. So for your viewers, I'll just describe OBV, Jackson. OBV is on balance volume, which essentially equates to when a stock closes above its open, the volume candle for that particular time frame is added to the balance of volume. So at the beginning of this, AMC had we'll say 54 million shares on balance. So when the stock goes down and closes down, then that volume candle gets subtracted from the OBV. And when the stock closes above, when it opens low and closes high, then that volume candle gets added to the balance. So OBV is a way of tracking what direction a stock may be going based on buyer-seller sentiment. If there's a higher balance of OBV, or if OBV is trending upward, then it indicates buying pressure or buyers stepping in, because there are more people buying shares and accumulating, which is the key word here, accumulating shares, than there are selling or distributing shares. So if OBV is heading up while the stock is trading sideways or going down, we would call that bullish divergence. If the stock is going up or sideways while the OBV is trending down, we would call that bearish divergence. And it's the same principle with RSI. The divergence is exactly the same. We're just looking at a different ticker and a different not ticker, but different metric, a different indicator for how that works and why we're measuring it. With RSI, we're just looking at like human psychology of swinging back and forth and who has the most weight in a given time period. With OBV, we're looking at the whole picture of whether people are buying on average or if they're selling on average. And there's a key indicator here with AMC. I'm going to briefly take a look at a stock like let's look at Uber. This is a play that we're in. Look at the OBV on Uber. This is perfectly normal. This is a very normally traded stock. The OBV moves almost identically with the price. The trends are pretty much the same. When the stock's moving up, OBV goes up, volume's up, it's all the same. And when the stock's going down, OBV goes down. Got a big spike here, and it's going back down. Like it's pretty much a mirror, right? But with AMC, GameStop, you don't get that. With those two stocks, you have this really bizarre behavior where there's a plateau in the OBV. The stock shoots up and then comes back down sharply, but the OBV shoots up and then consolidates sideways.
Yeah.
That's bullish divergence. What I ended up doing was I started drawing patterns, charting patterns, the same way I would draw patterns on a chart if I was looking at the price. By doing that, I created these falling wedges and these just ordinary bull wedges.
Bull pennant.
They're basically bull pennants. So this is a falling wedge here that started us off, and these are two big bull pennants on AMC's on balance volume indicator.
With
and
a
what
false
I saw
breakdown right before the rip.
exactly, each time there was a big breakdown, and the price only fell like maybe it was like 10-15% fall over the course of 3 trading weeks. Then all of a sudden it rebounded by 5%, and the OBV cracked through both the support and the resistance line. You can go ahead and scroll this up so it's a little easier to see. So we have this sell-off that occurs here, and the OBV drops out, bottoms out, and then the stock starts to trend upward, and then the OBV starts curling up. And notice the price is only moving by like 2, 4, 5% increments, but the OBV is trending upward. Definitely a sign of buying. And the thing is that OBV also accounts for gap ups. So if the stock gaps up and closes down, as long as it doesn't close below its previous close, the OBV is still added. And that's the key here. The OBV is beautiful because it accounts for these gap ups and gap downs. So you know which direction the stock is going and where the buyers are at, or the sellers, as the case may be. So even though we had this red candle, OBV went up anyway because it opened up higher, and it closed below because of that gap up. So this OBV on this candle, even though it's a red candle on the chart, gets added to the balance. And this was actually a big signal right here. This breakout, consolidation, and then another bend upward. And AMC squeezed the very next day all the way to $20. This is a very short time frame. Let's look at it. What happened from January all the way through to May and June. Had big consolidation. The price sold off really badly and then stayed low until we started breaking trend and going for the top again. This is where we established our wedge. These two highs and these two lows, and then this low here as confirmation. We had another punch down off of resistance, and then a breakdown. There's a fake out breakdown below the OBV and also below this bull pennant, or this bullish wedge. And then all of a sudden we crack up through it again. And this time, this would have been, the 13th of May, which is when I started looking at the short exempt volume. And throughout that period, we consolidated. And finally, on May 24th is when, or May 25th, excuse me, this is the confirmation that I had looked for. And I didn't know about OBV at the time. It would have been confirmation for me that this is what was going on. But this is when I bought just based off of the short exempts, and we went to $70 just a matter of days later.
Yeah.
And now we're doing it all over again. We got tops and bottoms forming it's a falling wedge, maybe like a bull channel. It's hard to say exactly. It depends on what time frame it goes out to. But what I was watching was when we established this next high and started breaking down, it created a falling wedge where we broke down below the support of that bull channel. And that matches up with the fall in the OBV. You notice the whole time AMC selling off, OBV